Good morning, everybody. Welcome back to another episode of the Market Open. We have 7 minutes until we see CPI, which is why we are here early. Thank you, everybody, for being here. We got a bunch of earnings this morning, including Circle, which actually is green right now. So we're seeing Circle get some momentum in the pre-markets based on their earnings. We have a new Palantir extension of their partnership with Sompo in Japan. If you don't know Sompo, it's one of the largest insurance companies in Japan. So we'll talk about the extension of that partnership, and we will get into that. There you go, Circle right there, up 9% in the pre-markets. I don't know this company as well as some other people, but based on the numbers, it looks kind of good. It looks kind of good in terms of the earnings. So we'll go deeper and see what we've got on earnings. We also have On Holdings that had earnings today. C Limited, they have earnings today as well. But the real story is CPI. In about 7 minutes, we're going to see what happens with CPI. Street's expecting 2.8. We talked about this last night. Again, good morning to everyone. Thank you for being here. I'm expecting 2.8 as well. Not expecting anything too crazy other than what the street is expecting. If we get 2.7, great. If we get 2.9, it's whatever. If we get 3%, that's not good. And if we get above 3%, that's really not good. So 2.8 is what we're looking at for inflation. Let me know in the chat what people think what we're going to get. And we're going to see in about 5 minutes how the market reacts. The other big story that went live right before I went live is, and I don't even know how to make sense of this, but it is what it is. BMNR, Bitmine, is raising $20 billion. You heard me correctly. $20 billion to buy Ethereum. That's kind of great. Dude, Tom Lee is single-handedly getting Wall Street to fall in love with Ethereum. By the way, there's some other Ethereum updates in terms of the net inflows for the BlackRock and Fidelity ETF. It's really green. Like, when I mean green, I mean it's really green. People are excited for Ethereum. So we will talk about that and go deeper into it. But my goodness, people want to see what happens with Bitmine, and they might want to give them the money to be able to get some more Bitmine. ATNF right here is up 60% in the pre-markets. This is a company that Peter Thiel announced a 7.5% stake in yesterday after hours. This is another Ethereum treasury. It's also a biotech. So you have a biotech / Ethereum treasury that's getting momentum going back on the Ethereum train, and we'll talk more about Ethereum after CPI. The fact that Peter Thiel invested in another Ethereum treasury outside of BMNR is just showing that he's kind of doubling down on this concept of Ethereum being the go-to crypto. Robinhood right here is down a little bit in the pre-markets. Big Bear AI is now below $5. They had a not good earnings, to say the least. $4.80, 32% down in the pre-markets. They're not growing anymore. Negative 11% year-over-year growth is what they guided for. Street thought they would grow at least 5%. So this stock's getting hit. That one is down 4%. But yeah, BMNR, dude, I mean, the stock's basically flat in the pre-market. 20 billion. Well, sorry, stock's down 5%. It was flat like 5 minutes ago. Now it's down 5%. Look, the 20 billion, I'm a little confused by. If they have to do an offering of 20 billion, which means they have to dilute shareholders by 20 billion worth of stock, the market cap is only 6 billion. So I don't know exactly how they're planning to do the offering, and I don't know how aggressive it would be towards shareholders. But if anyone was looking for a dip and, you know, they're dumping 20 billion worth of shares, I mean, maybe today is the day where you get that dip. But that 20 billion is going to be utilized to just buy Ether. And as a result, if Ether runs 4,300 on Ethereum, then BMNR is probably going to run as well. So that's what you have for there. It's an ATM offering. Okay. Yeah. Is it up to 24.5 billion? Really? Goodness great. I didn't get to read the whole thing. I just saw it in the morning and I was like, wow, that is... Well, the offering says up to 20 billion. I guess in the nitty gritty, they might have 24.5. They don't have to do it all at once. Could be just preparing the runway. Yeah. So to me, it feels like an ATM shelf offering, essentially, where they can do it if they want to. But also that means the overhang of a $20 billion offering is on the stock, which could create the volatility and the price to the downside. But again, Tom Lee wants to get to 5% of Ethereum, and it's in their 8K. Okay. So then there you go. I mean, you're talking about an enormous amount of money, $20 billion to buy Ethereum. But we need a good CPI for all of this to even matter in the first place. Now, do we really need a good CPI? I mean, kind of. Again, I was talking about this yesterday. If CPI is hot, are you selling your NVIDIA? No, you're not selling your Palantir, your Hood, your Rocket Lab. You're not selling anything if CPI is hot. But if CPI is hot, it doesn't help with all of the macro arguments that we are trying to put together. And one of the cases for the macro being good is that inflation is coming down, growth is going up, therefore we can cut rates. If inflation's not coming down and growth continues to go up, then you have some issues. Eventually stopping growth from going up if the Fed doesn't cut rates. Right now, the probability on a rate cut, we got 2 minutes until we get the CPI. Wow, folks, look at this. Dude, this number was 91% last week. Now it's 82%. If they rug pull our September cut, it is not going to be fun at all. So I hope they don't do that. But like that percentage has been going down over the past couple of days. And if this CPI is hot, I could see that going down again. And so we need this CPI to not be hot. 2 minutes. Let's see. 2.8, I think is reasonable. Street is expecting. Street's expecting 2.8. There you go. Street's expecting 2.8 right there. On month over month, Street's expecting 0.2. And core, we're expecting 3. On the yearly, on the monthly, we're expecting 0.3. So those are the numbers we are looking at, and we're going to see what we get. Nick says, I'm scared. Dude, like all of us are just waiting for this one number. Most of our friends and family have no idea what CPI is, nor do they care. Like most Americans don't care. Most like human beings across the world, even though America's CPI obviously affects the stock market, but like we're over here waiting for this thing to load up to see if it's a 2.8 or 2.7. It's actually ridiculous, bro. It really is. But we all love it. We all love it. Yes, Circle's up 9%. They crushed earnings. We'll talk about Circle. Here we go. 2.7. Let's go. 2.7. Yes. 2.7. We beat year over year. 2.7. We beat it. And it's not 1984, and I'm not Michael Jackson, but we beat it. Inflation rate month over month, 0.2 versus 0.2. That came in line. Year over year, 3.1 versus 3 on the core. Okay, we didn't beat that. 3 on the yearly, it's a little higher than expected. On the inflation rate month over month, that's 0.3. That's fair. But on the year over year headline, 2.7 versus 2.8. Okay, so if that core inflation year over year just came in 0.1% down, that would have been amazing, but that came in 0.1% higher, even though the year-over-year X core was down 0.1%. Let's see how the market's reacting before we get into the numbers. Robinhood, that's green, 113.50 to 114.52. S&P, that's green. Hold on, S&P looks like it wants all-time highs in the pre-market. 638.60, that's up 0.5%. Tessie, that's green. Palantir, that's green. That core headline not really affecting the broader market from that 2.7 versus 2.8. AMD, that's 1.2%. SoFi, that's almost 23. Googs is green. Grabs is green. Reddit's green. Meta's green. Meta's trying to get back to 780, 770 right here. Salesforce, which got hit yesterday, that's green. Bitcoin, 119. Where is BMNR? That one was down 5%. Now it's barely down. Where is Ethereum? That one's basically flat now. Ethereum, 43.55. We haven't seen 43.55 in a long time. I think we barely touched it yesterday. Lyft is up. Home Depot's up. Cisco's up. Baba's up. Wow, Hoodie, 115. All right. Not too bad. 2.7. Not too bad. Tessie right here, 345, trying to break through. I hit 344 yesterday. Or no, I hit 346 yesterday. So potentially could break through. Wow, S&P, 638.70, maybe going for 639. Folks, that is not too bad. That is not too bad at all. Now, let's get deeper into these numbers. Again, the headline, 2.7 versus 2.8. Core, 3.1 versus 3. But that headline is seeming to be what the street actually cares about. And that is what's creating some of this momentum. Now, Hims is going through a little bit of a PR issue. So Andrew Dudum sold some shares yesterday. I don't really care that he sold some shares. But apparently he tweeted to someone that they should go all in on their stock the day before his filing came out. On August 10th, someone said, if I get a direct response from the CEO himself, Andrew, answer hello to this comment, and I'm going to buy all in your stock. And he said hello. And then a day later, a filing comes out that he sold 660,000 shares. I don't care about the insider sell. I really don't. The guy deserves to take his profits. But dude, this looks horrible. This looks so bad. Like it looks so bad to do this. So yeah, I don't think it affects Hims long term, but Hims is down right here 2%. And not the best thing from the CEO, but it is what it is. Google right here, 201, S&P 637 again, trying to go green. All right, so let's get deeper into these numbers. Let's get deeper into these numbers and see what we got. Here we go. The index for shelter rose 0.2% in July and was the primary factor in all items monthly increase. The food index was unchanged over the month, and the food away from home index rose 0.3%, while the food at home fell 0.1%. In contrast, the index for energy fell 1.1% in July, as the index for gasoline decreased 2.2% over the month. Okay, so shelter was kind of your main reason for why we had the increase. That is not the worst thing in the world. Okay, the index for all items less food and energy rose 0.3% in July, following a 0.2% increase in June. Indices that increased over the month include medical care, airline fares, recreation, household furnishings, and operations, and used cars and trucks. Okay, so the used car market continuing to increase. The indices for lodging, away from home, and communication were among the few major indices that decreased in July. Notice how they say few major indices, so you didn't have a lot of things actually decrease in July. Dude, the fact that we came in at 2.7% is incredible, given all the stuff that increased. Medical care, airline fares, etc. The all items index for 2.7% rose 2.7% for the 12 months ending July, after rising 2.7% over the past 12 months. So it's flat month over month, but year over year, it's flat year over year, 2.7 versus 2.7, but the street thought it would be 2.8. So the fact that we came in at 2.7, likely because of energy. Energy fell 1.1%. Energy is what saved us. Shelter could have led to that 2.8 read, but energy coming down, which was what we expected given oil prices were down, was not the worst thing in the world. Indices for food at home declined 0.5%. Non-alcoholic beverages increased 0.5%. Food away from home rose 0.3%. The index for food at home rose 2.2% over the 12 months. Energy decreased 1.1%. Gasoline decreased 2.2%. The indice for electricity decreased 0.1%. Natural gas decreased by 0.3%. So that's good for energy. In airline fares is up 4% over the month. That's a bit aggressive. Recreation is up 0.4%. New vehicles is unchanged. Used vehicles was up 0.5%. Medical care was up 0.7%. Prescription drugs fell 0.2%. Okay, look, at the end of the day, this means we got to cut. What is the new probability for the CME? It's at 82.5. Okay, we went from 82.4 to 82.5. I think this, oh wow, S&P 639. I think this is a clear signal that we still have to cut. 2.7 is still not good. And it's still way better than 2.8, right? The market thought it would be 2.8. So at the end of the day, it doesn't seem like a horrible read that we're getting on CPI. The only annoying part of this is that monthly number on the core, which is a bit more aggressive. And I'm still trying to figure out why. Obviously, it's how they calculated it. But we came in at 3.1% year over year on the core. On the monthly, on 0.3, that came in line with expectations. But year over year, we did come in at 2.7 versus 2.8. Is Ethereum running? Oh, Ethereum's got to love this. Ethereum, there you go, 43.50. Ethereum's got to love this. Bitcoin should be loving this as well. By the way, NVIDIA, 40 cents away from an all-time high. They didn't let it break 184 yesterday, but it is very close to doing it. Bitcoin right here trying to go green on the day. I mean, more rate cuts, more liquidity, better for crypto. Very simple. Better for BM&R, better for HOOD, better for leveraged assets against crypto. Coinbase. Wow, Bitmine goes green. The headline of the day, guys, Tom Lee's raising $20 billion to buy Ethereum. 20 with a B. And this was down 5% in the pre-markets off the idea that there's probably going to be some dilution. But now with that CPI report, it's green. And I don't know how it opens in the or when the market opens, but now it's up 5% at 61.56. This is pretty incredible. And we have a decent, let's get a little bit more coverage on it. And then we'll go from there.
I just want to make one point.
Do you admit that you were overly pessimistic about what was going to happen from tariffs? Okay.
No.
You don't?
The dire forecasts were from the dire tariffs, right?
Right.
All
And
that
those-
stuff came out
Right, but in total,
after April 2nd.
in total, maybe you
and
should
the
have known that
president
was.
backed off.
But it
of
was
those tariffs.
negotiations all along, though.
But that's different than you saying to me, Steve, here are the numbers.
Well,
here's my assessment of the economic impact of
we
the
were
numbers.
probably never
you
going
should
to. We
say-
weren't going to be at 140% tariffs on China for very long.
But I'm
Okay, Rick,
okay,
I-
No,
you know,
but that was
I
why.
don't
No,
wanna
but to
cut
the
Rick
extent.
off.
No, but I think to the extent. I'm sorry, but to the extent that there were these dire warnings, and people thought, "Oh my goodness, the sky is falling." The reason why the sky was falling was because the tariff numbers were at these crazy rates.
Andrew, by now we expected to see it in real data, in the real economy, in the real
Rick,
stock
that's because
market,
they weren't
and it never happened. And it never happened. And Rick, go ahead.
Yeah, I mean, listen, I'm a numbers guy, and I think Steve actually said it, but he kind of didn't put the accent on the right syllable. He's still
Accent.
waiting, but the point is that still waiting is victory for those that were screaming, you know, we're going to have a big, horrible, scary boo inflation catch. And the problem is you can only scare people with the same scare line so many times.
There's no intent to
After
scare,
about
Rick.
the ninth time, people don't get nervous
there's no
anymore.
intent
And
to
I think the
scare.
University of Michigan, you know what? You said you didn't want me talking over you. I would expect the same courtesy from you and
Okay.
Andrew. How's that?
Fair enough.
Okay.
Fair enough,
So
sir.
here's the
Yes.
deal.
I apologize.
In the end, when University of Michigan sentiment had those outrageous numbers that shut up on the 1 year and 5 to 10 year inflation, that's when I knew that we could not look at this survey data through the prism of
Okay.
respondents and political
Hold on.
issues.
To his point, when I found out the University of Michigan interviewed 200 people, and that's how they got a 7% inflation target, I also started to doubt the credit. I mean, 200 people, that's just not, I don't know how that's credible for a massive poll that the market uses to judge inflation expectations.
Because they poison the well of data. And that's what we went through. And as time goes on, things are going to level out. All I know is the same scrutiny on this uncertainty was never present in the Inflation Reduction Act or serious issues of the past where you really had something going on that could alter the framework of inflation and prices.
I have one question that I'm going to ask to the table for a second. You know, for some reason, you like this data. I don't know why we like this data. We don't like the jobs data. And so my question, should we fire the head of BLS?
Andrew's got a point. He says, wait a second, we like this, we don't like jobs. What's going on here? Ethereum, 43.82 on Ethereum, up 5%.
Again, I don't understand, you know, which is the number we're supposed
It's
to
not
believe.
that we don't like the data. It can't be collected accurately. We've always known this. But it's
But
only
this
in the
is-
last
but this
5
is numbers
months
accurate
that
and
we've
the
had
other numbers not.
volatility.
Andrew, I don't think that's the story. I think the story here is that you have inflation. Core inflation is up 3 months in a row. It is showing up. But Joe and Rick are correct. The market
It's
is not
lower than the
troubled.
beginning of the year.
Rick, I'm complimenting you and you're cutting me off, okay? So let me just finish that, which is that you guys are correct. The
You
market
damning
is
with faint praise.
No. The market is untroubled by it, and that was probably something that I don't know why. There is no market prediction inside the inflation prediction. When people say you're going to have tariffs, you're going to have inflation, all of that turned out to be accurate. 3 months in a row, you're up. But the market is untroubled by it.
Well, it's
And
untroubled. But I can tell you why part of it's
can't say
untroubled.
yes or no on that.
One of the reasons it's untroubled is because we've delayed now this negotiation with China for another 90 days. So again, we're back to where we were before. As long as the tariff rates in China don't go to some crazy place,
you still
the market is.
Look, I think the conclusion to all of this is pretty simple. Everyone, to an extent, didn't really understand what Trump was doing during the tariffs, including myself. And at the end of the day, it was a lot of shock therapy, get the market to be super scared. And then Trump reacted based on how the market reacted. The market fell 30% to 4,800. Trump said, hey, we are going to do pauses. We're going to do delays, yada, yada. And now we're seeing it back and forth, 43.97 on Ethereum with Trump and how he negotiates with the EU, with India, with Japan. I mean, we've seen this back and forth. So at this point, I think all of us are smart enough now to not fall for the same shock therapy that Trump uses when it comes to negotiating. 4,400 on Ethereum. There you go. First time in over a year and a half on Ethereum. My goodness. Last time we hit 4,400, folks. No, it's been 3 years. December 2021. Wow. December 2021. Incredible. Absolutely incredible. Now, in the midst of all of the negotiations that Trump has been doing with tariffs, we have got inflation to come down, not to come down dramatically, but at least to come down from the expectations that some people had where it would be 5%, 7%. It's like, no, we're nowhere near that, right? We're not getting to those levels, which is a good thing. The only problem here now is the labor market. And Andrew does have a point, which is why do we trust the CPI, but we don't trust the labor market? And I think to an extent, that is why Trump has a new BLS commissioner. We're going to see what this new BLS commissioner comes up with. He appointed them last night. By the way, this guy is a fan of Bitcoin based on some of the research that I was doing on this BLS commissioner. And all of us can agree, Democrat or Republican, like it's not political, that the jobs data collection methodology is abhorrent. And under Biden, it was bad. Under Trump, it was bad. I would like to get some transparency on how they do it. So I hope that they're not just going to put up amazing job numbers and we're not going to know how they put up amazing job numbers. It would be very suspicious if they just say, hey, we added 500,000 jobs every month. It's like we need to understand how that's happening. But hopefully now that we have a new commissioner of the BLS, there is going to be a better way for us to understand the methodology of jobs. And it's not just like random job reports that are coming through. But if you have a better methodology for jobs and you have inflation coming down and you have trade deals coming in place and you have earnings that are as good as they are going into Q3 as well. Q2 has been phenomenal. Ethereum right there, 44.10. Then I think you have a bull market that can sustain itself. Now, obviously, if we don't have any transparency into the jobs data and the new commissioner just says, hey, we added 1 million jobs last month, I think that's going to be just as bad as we lost 250,000 jobs because no one's going to believe that, dude. No one's going to believe that, oh, we just randomly added all these jobs now that we have a new commissioner. And then it would feel like the books are really being cooked. So, I mean, we're going to see over the coming months what this data looks like. But if CPI is coming better than expected and we continue to have decent job growth and hopefully the labor market holds up along with earnings, I mean, you have a market that is resilient and sustainable, which is going to be nice to see. And the question is, can we just have this end up playing out? Exactly. We need transparency. Yes. I mean, like I want to know how they, like, because if you have a new BLS commissioner, obviously you didn't like how the previous commissioner was collecting the jobs data. And then objectively, they messed up under Trump and they messed up under Biden by revising by 880,000 jobs. And under Trump, they revised by almost 300,000 jobs. So what are we doing to protect against revisions? That would be my question. And that's what I would want to know. But in terms of the market expectation towards CPI, I mean, the street likes it. Thank you, everybody, for being here. These are the numbers that came out this morning for those that are just joining. And it is bullish. Core inflation month over month, 0.3 versus 0.3 expected. Year over year, 3.1 versus 3 expected. That's a little bit of a miss. 0.2 versus 0.2 on the inflation rate month over month. And 2.7 versus 2.8. That's a beat on the year over year for July. And the market is excited. Dude, we needed a good CPI because there was some chatter around inflation being a bit too aggressive. Robinhood right there at 115, Palantir 184, Tessie 344, S&P trying to push 640, and then Ethereum doing its thing. We needed a good CPI, and outside of core, we got a good CPI. So we'll see when the market opens how the street thinks of it, but it was nice to see that number come in way better than expected. Last time it didn't come in big. Last time I think we came in line, but it was still pretty high. So this one coming in below is nice to see. Probability of a rate cuts now are 82.5%. Or sorry, no, they just got updated. Folks, there you go. 90%. Thank you. There you go. All right. So this rate cut was, or this CPI report was enough. This is the last one, right? Yeah, this is the last. No, we have one more CPI. We have one more CPI in September, but this was the second to last CPI before the September meeting. And now it looks like the market loved the 2.7 versus 2.8. And that went from 82 to 91 this morning. So, dude, we got 4 months left of the year, basically, 4.5 months. We got to protect this bull market. The companies did what they needed to do for earnings. Now it's time for the macro to cooperate. And so far, it looks like with CPI and the potential probability of rate cuts because of CPI coming better than expected, maybe the macro is going to cooperate, which is what we need to see. Speaking of earnings doing well, we had earnings this morning. Let me know if anyone owns this one. Circle. So not bad. Revenue's up 53% year over year, 658 million. They have 5.7 million wallets connected to their platform, 5.9 trillion in USDC on-chain transaction volume. That's up 540% year over year. And USD in circulation is 61.3 billion. That is up 90% year over year. I don't fully understand this company, but those earnings just on a bird's eye view look pretty damn good on the numbers, up 11% on the day. Street seems to like the results that Circle put up. And in terms of their EPS, they missed by 1,400%. I think that has to do with something around accounting, why they're down $4 a share versus 34 cents a share. But revenue is what they beat by, and it seems like that's what the street cares about. And that's why we were up. Yeah, they lost $4.48 a share. I would imagine there's something from, they maybe took a goodwill impairment charge, or there's something around the accounting, or something related to their crypto mechanism of accounting for different numbers. But the street does not care about that 448. Also, it's their first quarter since going public, so there's probably a reason for that. It seems like the street cares about their transaction volume growth and their overall top-line revenue growth, and those are just phenomenal year over year. That's up 11.3%. Hoodie, trying to go back to 116. We were at 117 yesterday. Tessie, 344. Palantir right here, 184.75. We do have an extension of a Palantir partnership that we'll talk about in a second. Lyft is green. Home Depot is green. Cisco's green. C Limited, they also had earnings today. That stock up 14%. This goes to show you Southeast Asia does have stocks that can do very well. I am in one of the stocks that is not doing very well right now, but there's a lot of potential in the region. They missed on EPS by 5 cents. Revenue, they beat by 6%. Revenue's up 38% year over year. EPS is up 360% year over year. C Limited does a lot of things in Southeast Asia, but they have just been an absolute monster of a company. They compete with Grab in some areas, but largely in other areas, they're not really competitors with Grab. And that's up 14%. So just because it's an international stock doesn't mean that, you know, people won't buy it. If you put up the right earnings and you put up the right growth, people are going to buy things that are growing. It's just, you know, Grab has got to get to those quarters where they're putting up these monster numbers. And C Limited is doing that right here. C Limited up 14.2% on the day. Circle up 11% as well. Yeah, Tilray, I think they had earnings yesterday, if I'm not wrong. This one got some move. This is up 19% right here in the pre-markets. It was up, I think, almost 30% yesterday. So that one as well. Looks like they crushed earnings. Market cap is $1 billion. This one used to be popular back in 2021. Getting a little bit of steam now, and that's great. NVIDIA, 20 cents away. 20 cents away from all-time highs. I think they want to get it there. I mean, NVIDIA, she's been trying, so like 3 days in a row, she has tried to get past 183.80. 88 is the all-time high. She got to 183.84 yesterday and then got hit. So today might be the day with a good CPI that we get above. And then we had on earnings, which were not too bad. Revenue was a beat, and adjusted EPS was slightly a miss. Revenue again, $749 million. Net income, $41 million. Shoes revenues up 30%. Apparel revenue up 67.5%. D2C revenue up 47.2%. And then Asia revenue up 100.13%. This is a company that a lot of people have said is a meaningful Nike competitor. Obviously, they're not as big as Nike, but people do like wearing their shoes. Market cap is about $14.8 billion. This stock is up 16% in the pre-markets as well. So you're seeing some decent earnings growth. I mean, we looked at all the aggregate earnings over the past couple of weeks, but you are seeing companies across the world, whether it's C Limited, whether it's On Holding, whether it's Circle, which is a new crypto entry, put up some decent numbers, and Ethereum continues to make a move. There you go, 44.11, and that's helping the broader crypto landscape along with the leveraged assets against Ethereum. BMNR in the pre-markets, that is green, up 3%. Again, for those that are just joining, Tom Lee filed for a $20 billion shelf offering to dilute shareholders of BMNR to buy more Ethereum. They don't have to dump that $20 billion like tomorrow, but if this filing goes through, then they can dump it whenever they want on shareholders. And again, that's bad in the short term, but if you really believe where Ethereum's going, they need to buy a lot more of it. And it looks like that's what they are going to do. Yeah, so we saw this last night as well. Peter Thiel acquires a 7.5% stake in an Ethereum treasury called ETHZilla, aka ATNF. Look, my takeaway from this thing is up 56%, is that if Peter Thiel's buying into Ethereum treasuries outside of BMNR, and he already has a lot of BMNR, I think he got in at 450, then he's getting really bullish on Ethereum. And if he's getting really bullish on Ethereum, then that means that, you know, you have someone who is one of the greatest investors of all time really saying, hey, Ethereum, that's my bet. That's the bet I'm making right here in the crypto world. And you're seeing this momentum right here. So that's why that one is up 57% as well in the pre-markets as he's buying more Ethereum. He probably owns 3% of ETH himself. You know, Founders Fund, they bought a lot of ETH back in 2023. And then I remember reading articles back then of them loading up on Ethereum. They've always been bullish on it from a developer perspective because they are a startup fund, right? So they see companies building on top of Ethereum, which makes sense. But the question is, how deep does he get into these Ethereum treasuries? And he is getting pretty deep. S&P 60 cents away from 640, trying to get their AMD 174.59, NVIDIA 183.50, and then Tessie right here 344.80 is what we have on the day. We don't know what Buffett's buying yet. There is a secret stock that Buffett has been loading up on. He's already bought $5 billion worth of stock. We are going to get more data soon from what Buffett ends up buying. We should be getting 13Gs and 13Fs either today or within the next 3 days. So we should be getting a lot of data very soon on the super investors, Buffett, Drux, Bill Ackman, and what they're doing. I wouldn't be surprised if today after hours we get a ton of those answers, or maybe tomorrow, but we should get to see pretty soon what's going on. Let's get a little bit more coverage on CPI, and then we'll keep going from there.
Research, also former Biden Council of Economic Advisors Chairman Jared Bernstein. He's currently a policy fellow at the Stanford Institute for Economic Policy Research. Gentlemen, what say you about these numbers? Do you like these numbers? Do you believe these numbers? I hate that we're even asking these questions. Do you believe these numbers? Peter, what do you think?
So first, I just want to say legs are hard. It's very hard to tell when a policy gets put in place when it's going to hit the economy. So that's the first thing. The second thing is that I'm not really a big fan of these numbers. My guess is that this reading, the core number is a combination of tariff pass-throughs, as Steve said, but also there's some firmer prices in some consumer categories. Some surveys have showed that some retailers have accelerated their price increases as they're drawing down inventory that they built up early in the year. Things like household furnishings, recreational products, and apparel, all of which come from China, or most of which come from China. So we knew that tariff-related cost pressures were going to be a key upside going into this release. Not as bad as we thought, but I mean, still, this is going to complicate the work of the Fed a bit.
Jared?
Yeah, I think there's tariffs can be found if you go under the hood, but I think the conversation you had, if you sort of averaged all those viewpoints, you get to the right place. Certainly, we're not seeing a level of consumer pass-through that's alarming, but it's there. Let me point out one number I just wrote, a set of numbers I just wrote down. This is core goods year over year. April, 0.2, May, 0.3, June, 0.6, July this month, 1.1. So that's a steady acceleration in core goods year over year. And what's notable about that, we just heard the Fed mention, is that the Fed was counting on core goods to be flat or even negative to help bring inflation back down to target. They don't have that. That's probably the fingerprints of the tariffs. Core CPI 2.82931 over the past 3 months, so a gradual upswing there. So much as you guys have been talking about, the tariffs are in the numbers, but they're certainly not jumping out and hair on fire at this point.
And I think that's the argument. The tariffs are jumping out, but they're not hair on fire in terms of seeing massive, massive levels of inflation. I mean, we're just honestly not seeing that yet. Maybe it's going to happen in the coming months, but if we don't see those massive levels of inflation based on the tariffs, and it's been, 4 months since the tariffs have been live and we don't see it yet, that is where I think the market gets very excited, because then we kind of avoid the biggest concern that the Fed had, which is that the tariffs will be inflationary. Okay, let's talk about Elon. And let's talk about Apple. Let's talk about Elon and let's talk about Apple. By the way, Fartcoin, for those that are asking, it was down 20% yesterday. It's down another 10% today. It looks like a lot of that money that was stuck in Fartcoin, which at one point was almost $2 billion of a market cap, now is $885 million. That $885 million should go into Ethereum, or it should leave Fartcoin eventually. So it is really good to see some of these assets that are absolutely worthless lose some market cap. I don't think that's risk off. I think that's people just being smart and saying, why do I own Fartcoin? Why shouldn't I own Ethereum? So I think we are going to see some of those assets start to come down in the crypto space if they're just not creating any value. All right, let's talk about Elon and Apple. Let's talk about Elon and Apple, because Elon went on a rampage last night. He is going back to war with Apple. He had a war with Apple earlier in the year, and then Tim Cook kind of calmed him down. But they are getting back to being kind of aggressive. So he says Apple is behaving in a manner that makes it impossible for any AI company besides OpenAI to reach #1 in the App Store, which is an unequivocal antitrust violation. XAI will take immediate legal action. And then you had Community Notes go against Elon and said, hey, Perplexity reached #1 in the App Store, DeepSeek reached #1 in the App Store. Both of these happened before the OpenAI Apple partnership that was announced on June 10th. So there has been a time where companies were able to reach number one on the App Store. And then Elon said, Apple behaves like it's owned by OpenAI. Why? Citing that OpenAI is one of the number one apps on all the editorial lists inside of the App Store. So in the App Store, the editors are able to like customize their own list of apps that they feel like people should download. And OpenAI is at the top of a lot of the AI productivity apps, also because ChatGPT is one of the biggest, AI bots out there. But Elon is upset about that. And then Elon said, Apple is the gateway to the internet for half of America. They are making it impossible for any other AI company to succeed by relentlessly promoting OpenAI in every way possible. And he cites a Bloomberg article saying Apple will pay OpenAI for ChatGPT through distribution, not through cash. Basically saying, hey, they have a backdoor deal, and that's going to make it impossible for Grok or Anthropic or Gemini to be able to succeed when it comes to the AI wars. Look, here's my take on this. I do think there is some collaboration between ChatGPT and Apple. I think it's pretty obvious. I mean, every editorial list that I've looked at on the App Store, I mean, I've noticed this before. Elon pointed it out. ChatGPT is at the top of all those lists. Now, the actual number one list, like the number one list for downloading productivity apps and just general top free apps that are in the App Store, ChatGPT is winning because it's ChatGPT. I mean, is Apple pushing it a little bit? Sure. I'm not going to say Apple's not pushing it, but dude, it's ChatGPT. You go up to a random person and they say, hey, do you know what AI is? They're like, yeah, ChatGPT. So Sam Altman has done a phenomenal job becoming synonymous with the concept of AI. No one knows what the hell Grok is. I'm sorry. Like, we know what Grok is, but no one else really knows. No one knows what Anthropic is unless you're like a real coder. Like, people know AI through ChatGPT. It's just that simple. People don't know what Gemini is. They know what Google search AI overviews might be. They don't even know it's probably called AI overviews. They're just like, oh, Google gives me the answer, and so I don't have to click on the link. But people know what ChatGPT is. So the brand recognition there, I think, is what's also leading it to get some momentum. I think the broader story right here is that, Grok's not doing that well in terms of user adoption. Like, we don't have any public numbers on Grok. We do have Grok 4 estimates compared to GPT-5, and it looks like Grok 4 is winning in terms of some of the modalities that it can succeed in. But I mean, we're not hearing about hundreds of millions of people every month using Grok. We're hearing 700 million people a week using ChatGPT. And I think, and I don't blame Elon for this, but he's really pissed off because he's the one who funded ChatGPT in 2015 with $40 million. And it ended up becoming one of the biggest AI companies on the planet at this point, worth almost $500 billion. And he has no share in it. He has no stake in it. So the question is, what does this mean for Apple and what does this mean for Elon? I don't think Apple is going to capitulate to this. I think Apple, it's Apple. Apple operates like a mafia. Apple cut off Facebook. They cut off iOS 14. They made it hard for Facebook ads to work. I mean, Apple has had a very large history of doing whatever they need to do to succeed. And so unless Elon really goes on the offensive and takes legal action, Apple is going to continue promoting whatever app they want at the top of the App Store. It's just that simple. The question is, how deep is Elon going to get into a fight with Apple to be able to make this thing more conducive to Grok? And I think there's a world in which he can get into a legal battle, but realistically, I also think people just don't know what Grok is. And that's why ChatGPT is one. So there you go. Yeah, even Elon came up with a name for OpenAI. Yeah, it's really sad, dude, because he owns none of it now. I mean, imagine even if you funded a nonprofit and then that nonprofit becomes a $500 billion enterprise when it was never supposed to become a for-profit company. Ethereum right there, 4,400, and then you don't own any of it. Like, it would be pretty salty as well. Big Bear down 30%. We covered this earnings last night. Unfortunately, they are not growing revenues at all, and it was a pretty ugly earnings. They didn't do any Q&A on the call. I mean, just not the best earnings from Big Bear. They said their federal government contracting is being disrupted via consolidation in the government. The way I read that is, hey, we're not winning any contracts. There's another AI company that is winning contracts that doesn't have AI in their name, but Big Bear right here below $5. That one is getting hit. NVIDIA news. We have NVIDIA news. NVIDIA's China's internet regulator ordered by ByteDance, Alibaba Group, Tencent Holdings to suspend their purchases of NVIDIA chips. Really? Are they really doing this? NVIDIA slightly green in the pre-markets. Oh my goodness. Are they actually doing this? Let's see if we can get some coverage on this. Dude, this might be their response to the 15% tax that China knows they're basically going to be paying. The information reports China's internet regulator ordered ByteDance and Alibaba and Tencent to not buy NVIDIA due to security holdings or security concerns. What security concern is there? They were buying these chips before Trump banned them. Where was the security concerns then? I don't know. I don't know if that's that big of a deal. We also don't know if that's fully accurate yet. That's the information reporting it. We got to see if some other websites pick it up. Nvidia's still green. I mean, you got a little bit of a red candle from 183.50 to 183, but it's still green. It's not dropping like a rock yet. Look, here's the thing. If we lose China revenue, we lose China revenue. Like, at the end of the day, Nvidia is going to be fine without the China revenue. It would just be really nice for them to have the China revenue. And this whole suspending their purchases of Nvidia chips, this is probably because the regulators want to go through the export control rules. Or B, they might be using this as leverage to get Trump to get rid of that 15% tax. Now, why would they care? Because they don't want to pay the US government 15%, because Nvidia might raise their prices by 15%. Or they might be trying to convince Nvidia to not raise their prices so that you can't price gouge them on covering the 15% tariff or tax, whatever you want to call it, that Jensen and Lisa might have been thinking of initiating to compensate for the extra revenue share that they're doing with the United States. Or they want Blackwell. That's actually the best argument. They want Blackwell. Again, Trump last night, he did confirm that he is going to be engaging in this deal with Jensen. It was kind of crazy to hear him say this stuff. But yeah, that is what happened. Let's take a little bit of a look at what he said yesterday based on this deal.
So he's selling a essentially old chip that Huawei has a similar chip, a chip that does the same thing. And I said, good, if I'm going to give it to you, because they have a, they have a stopper, what we call a stopper, not allowed to do it. It's really known as a restrictive covenant. And I said, if I'm going to do that, I want you to pay us as a country something, because I'm giving you a release. I released them only from the H20. Now, on the Blackwell, I think he's coming to see me again about that. But that will be a unenhanced version of the big one.
So again, China, if this is true, might be saying, hey, we don't want the H20, we want the Blackwell, and maybe we're not going to accept the second generation chips. And therefore, quote unquote, security reasons are why we are suspending Alibaba and Tencent from buying their chips. You know how crazy this is? Because like China, one of the reasons people don't like the Chinese government or quote unquote Chinese capitalism is because the Chinese government can say, hey, you're not allowed to buy these chips, right? And the government gets involved inside of companies. But now in America, the government can say, hey, if you sell these chips, we take 15% of it. I mean, it's just a totally different world that is taking place now in the US. Obviously, the chips are, since the Biden era, have been deemed a national security concern. So, you do have a precedent for the government stepping in, particularly on these chips. But the fact that it's almost similar, the Chinese government and the United States government, how they're interacting with this is pretty incredible. And so that's what you got for Nvidia. I don't think it's a big deal, dude. Nvidia, yeah, it's down from where it was in the pre-markets. I could see it dipping today on this news, obviously, if you're losing China revenue. But we need a lot more clarity to see what happens right there. Nvidia right here, 181.93. Now you're seeing a little bit of red from the pre-markets. S&P. Now here's the thing: when Nvidia falls, the S&P could fall. Like, Nvidia is 8% of the S&P 500. Is the largest holding of a single stock as a percentage of the overall ETF since 1981. Apple was the second highest in 2023 at 7%. So Nvidia really is the market. Nvidia's always been the market, and their earnings have always been really important. But now Nvidia is the market. And we need to get some momentum on Nvidia, probably for the S&P 500 to continue getting to all-time highs. So that's what we got. VIX is down 5%. Again, for those that joined, CPI came in at 2.7 versus 2.8. The market likes it. The market is happy about that CPI so far, and that's why you're seeing some momentum. Let's get an update from Bank of America on consumer spending and what that means as we get into the latter half of the year.
Every year?
I'd say it's more than sort of okay.
It's really sort of okay.
Well, it's sort of okay. So consumer spending year over year up 1.8%. If we were to do seasonal adjustments, it's up 0.6, which is, combine that with what it was up in June, you are more than offset what we saw the declines in April and May. So really positive spending from both retail and services. But what you're going to remember I told you last month was services spending had declined in June for 3 months in a row. First time that had happened since 2008. So we were really looking to see what was happening with services. Up 0.9. So not just rebound, but well more than offset.
Okay. Are these numbers,
They're new.
And that's pretty, and that matches the retail sales data we got in July as well. I mean, so again, this whole argument that demand is going down and consumers don't have the disposable income to be able to get a manicure and pedicure, for example, which is a service. I mean, it looks like in July that rebounded, and that's not the worst thing in the world right now for the economy.
no, I know they're new, but you know who might have previewed a little bit of this? Brian Moynihan, did he?
Brian Moynihan previewed a little bit of this in his conversation with you, but I would point out there's a slight difference between the numbers that Brian reports and that I do. It's the same set of data.
Okay.
But Brian will tell you what spending is doing overall with the bank. We look at it on a per household basis so that you're seeing apples to apples. You're not necessarily picking up when Bank of America has market share.
How do you square these spending numbers with what we're seeing in the employment picture, for example, or CPI? Because sometimes your numbers look positive, other numbers look negative.
Sure. So our numbers are positive in July. What we saw was growth in services, growth in retail. But if we look at retail, the data within retail, there is some signs for us to remain cautious. What do I mean by that? The growth in retail was tempered a bit. It was only up 0.2 relative to 0.4 in June. So coming down a bit. And, speaking of previewing, Steve Leisman previewed this yesterday. Right. One of the things to think about is some of the things that were driving retail spending last month were temporary phenomena, online promotions. And look at Prime Day. Prime Day was 4 days instead of 2 the year before, right? So that's an issue. Back to school had a slow start in June. It picked back up in July. And then there's tariffs, right? It was very widely known that August was going to be the trade deadline. So did consumers buy ahead of tariffs, do some buy ahead in July in anticipation of tariffs?
Oh, we just got a new 90-day reprieve from China.
We did. So maybe what we're seeing, what we saw in July was similar to what we saw in March with some tariff buy ahead. Maybe we'll see that in 90 days. TBD. I'll come back.
What about inflation?
So inflation, great question. And we'll see, later.
Thanks for the great question. All I said was the word inflation. So I feel very good about mine.
Great statement that was implying a question. Here's what I would tell you in our data. We don't look at the basket size. We don't have that level of detail. But what I can tell you is that the growth in retail spending was greater than the growth in transactions. So by definition, that's implying things are costing more.
And based on the CPI we got today, although things might be costing more on aggregate, CPI comes in better than expected. So she's right. I mean, there probably is, if retail sales are that good and you do have increased prices, especially if you have, less supply versus more demand. Yeah, you're going to get some inflation, but at least on the year-over-year numbers, we are not seeing that increased inflation. Now in core we are, and core has a bunch of different metrics that allow it to be a bit higher than expected, but that is not the worst thing in the world right now for inflation. Now, in terms of some of these CPI numbers, take a look at this right here. The actual 3-month annualized percentage change, the highest is coffee. For those that drink coffee, let me know if your coffee is getting more expected or more expensive, but that's up 25.9%. Then you have beef up 15%, cookies are up 15%, peanut butter is up 14%, canned vegetables up 12%, canned fruits up 11%, farm-related products up 9%, fried beans up 8%, and fresh vegetables up 8%. So over the past 3 months, coffee has seen the biggest increase. We do have 50% tariffs on Brazil. I think that's probably going to potentially impact the price of coffee as well. We're going to see if we can resolve what's going on with Brazil as well. But that is green. Yeah, a lot of you guys are saying coffee is more expensive. Dude, who drinks coffee every morning? Put in the chat if you drink a cup of coffee every morning, whether you buy it or whether you make it at home. Like, who needs their coffee? Coffee prices up bigly. I drink Starbucks, so I'm used to the price increasing every other week for the past 10 years. Dude, Starbucks is stupid, bro. I went to Starbucks the other day, and I was just surprised. I was like, am I really paying $14 for, like, a sandwich and, like, a small, I think I got a caramel macchiato or something. Don't make fun of me. I know it's a girl drink. I don't care. But goodness gracious, bro, what is going on? Like, it's like, this is stupid, bro. Dunkin', this would be like maybe $10, maybe $9. Starbucks is ridiculous, dude. People still go there. I got a lot of people drink coffee every morning. A must 4 times a day. Okay, that's a bit aggressive, dude. That's at least 4 cups a day. I've never been that into coffee, bro. To me, it's like a luxury. It's like, oh, it's a Saturday morning. I'll go get like a macchiato or something like that. To me, I've always seen it as like, oh, I'll relax and I'll get a little drink. Not that I need it every, my mom actually asked me last night. She was just like, where do you get your energy from? How are you talking so much? Because she was like, do you have another podcast? And I was like, yeah, at 9:30, I have a podcast with Tanner. And she was like, dude, you need to sleep. And I was like, but there's so much to talk about. There's so much to talk about. But I've never used coffee for the energy. It's never been coffee. But I can understand why people need their coffee. Just a little jolt in your step in the morning. And video right here, 182.28. So coffee seems to be the thing that is going up the most. But again, overall aggregate CPI, we're not getting a massive increase, which is good. My dude can talk. Yeah. My mom saw that because we did the market open. Then we went to the new apartment, picked up the keys. Then we came back. I had a meeting before the market closed. Then I had the market close. Then I had a meeting right after the market close. And then finally I came downstairs and she was like, you've been talking for 10 hours straight. And I was like, okay, this is what I do. And she was like, do you have another podcast? I'm like, yeah, 9:30, a podcast with Tanner for like 2 hours. And she was like, dude, I don't get it. But it's not coffee for me. It's not coffee. 3 times a day, but an espresso. I'm drinking coffee right now every morning. Macchiato is not coffee. Okay, that's fair. Get a little older and I'm basically 28. What, do I have to be 35 to like know how much do I need coffee? I feel like in your late 20s, you should be, knowing about coffee or like getting into the coffee bug at this point. But I'm just not there yet. Now, granted, although coffee is what will give you energy, Bitmine is getting a lot of energy from the stock market based on liquidity. Take a look at the chart that Bitmine posted yesterday. This blew my mind. Bitmine is the number 25 stock in the market based on liquidity. Now, they disclosed this stat yesterday, but seeing the way Bitmine ranks across all these other companies is unbelievable. And we're going to go through this list in a second, but take a look at this. So Bitmine gets $2 billion or $5.7 billion, or sorry, $2.1 billion of volume every single day on the, on the average 5 days. So every 5 days it gets 2.1 billion, which is incredible. It is trading more volume than Micron, JP Morgan, Arista, Reddit, Palo Alto, Exxon, Intel. I mean, it is becoming a household name in the stock market. And it's only a 6 billion company. That's correct. Now, take a look at the top 5 names, which I did not know about this. NVIDIA, Tesla, Apple, Palantir, and AMD. This is over the past 5 days, which is kind of an aggregate look. And this stuff varies every week, but like in general, these are the names that stay at the top of the list. Palantir is the number 4th most traded liquid stock in the stock market. Palantir, not Amazon, not Microsoft, not Google, Palantir, not Oracle, Palantir. Then you have AMD, Amazon, Microsoft, Meta, Lilly, Google's number 10, Broadcom's number 11, AppLovin's 12, and Robinhood's 13. I don't understand how AppLovin and Robinhood don't make the S&P 500 in September. They're the number 12 and 13 most liquid traded stocks in the entire market. The idea that Hood and AppLovin don't make the S&P 500 would be insanity. It would be crazy if that doesn't happen in September. Then you have Coinbase, then you have MSTR, then you have Google, UNH, Netflix, SMCI. HIMS is number 20. That also is a pretty big one high up on the list. Then you have Oracle, Uber, Visa, Costco, and then Bitmine. So what is the takeaway from this? The takeaway is Ethereum is very real. People are getting very excited about Ethereum. And to hammer on the point for why Ethereum is so real, take a look at this, which came out yesterday. Ethereum is now the largest ETF via inflows over the past week. And it is aggressive. Yesterday, Fidelity and BlackRock alone had $1 billion Ethereum day. Total Ether inflows were $1 billion for the first time ever. These are near record Bitcoin numbers at a fraction of the market cap. Bitcoin's above 2.2 trillion. Ethereum is at about 500 billion. So, yeah, I mean, like the amount of volume that's coming into Ethereum is aggressive. And obviously that means the leverage assets are going to catch a bid when that's happening, if Ethereum catches a bid. And that's why BMNR right here is up 2% in the pre-market. Again, the big headline of the day for those that missed it, we got the market open in about 15 minutes. Bitmine is raising $20 billion in a ATM offering to be able to buy, that's 20 with a B, $billion to buy Ethereum. So there you go. It is pretty damn incredible. but that's what you're seeing in terms of momentum. How does SMCI make number 19? Dude, people love SMCI. Although they had a crappy earnings, people have loved this stock for a while. Some of these names are quite interesting, but they make the top list. And I think the reason they make the top list is because they have an audience. Like MicroStrategy, right? That's all people that believe in Sailor. Netflix is up there. Netflix is a staple name. HIMS, I was surprised at number 20. Like, I know HIMS is a big deal, but number 20 in the most liquid stocks? That's probably why it's also so volatile. And then towards the end of the list, you have Johnson & Johnson, MasterCard, etc. But NVIDIA, Tesla, that makes sense. I mean, it's NVIDIA and Tesla. Apple, it's Apple. And then Palantir, bro. So when people are saying Palantir is going to have this 80% drop or something because it's expensive, like, I get it, it's expensive. But it is so traded. There's so much volume of trading going in on the stock, especially on the options market as well, that if it has a 10, 20% dip, people will buy that dip because people know about the name. They hear about the name, and they'll probably want to buy it if you get a bit of a dip, or they're going to have to buy it in regards to the puts that they sell as they get assigned. I mean, there's just so much activity on the name that it might be hard for it to get down as much as some people think. Is the offering soon? No one knows. So this is the fear of Bitmine. You could be on top of the moon and then they dump $1 billion worth of shares on you. And obviously that could suck. So the only, risk with Bitmine right here is that Ethereum tanks or that they dilute. Ethereum tanking is part of the game. Eventually Ethereum goes up and down. Now it looks like Ethereum is breaking out. So hopefully it's done with that kind of whole consolidation phase between 2,000 and 3,000. And then the risk of dilution is not really a risk. It's a function of what the treasury is supposed to do. And if you don't understand that the treasury is supposed to dilute, then you might think it's a risk and might be pissed off when it happens, but realistically, that's the function of the treasury, to dilute, buy more Ethereum. So I don't know when it's going to happen, but obviously it could happen. Now, we've been pretty bullish this morning. Circle right here is up 14%. I am going to give you a uneconomic recession indicator. Circle right there, 184, because I want to be objective on this show and provide all the good data and the bad data. And this right here is definitely bad based on how you interpret it. But still, it's not the best. There's a company that missed estimates on EPS and revenue yesterday that theoretically is an uneconomic indicator. Ticker symbol RIC, RCI Hospitality Holdings. Missed on EPS by almost 50 cents, 77 cents versus $1.24. Sales of 71 million versus 78 million. So it's a 42% decrease year over year. On the EPS, they had $1.35 of EPS last year. Now they have 77 cents. Now, for those that don't know what RIC is, in a nutshell, some of you guys know it. Rick Huang in the chat, who called my name. RIC owns and operates a multitude of strip clubs in the United States of America. So if they have their earnings going down, 6% in the pre-market, they're down. You do have people that are not really having the disposable income to go out to those establishments. And as a result, that could be the first sign of recession. Yeah, gentlemen clubs. Let's call it that. People are not making it rain as easily. So now, granted, maybe the reason Netflix is up 35% year over year is because people are staying at home and they're getting their entertainment by just watching Netflix or something, and they're not going out as much. But see, even that thesis gets broken by Disney parks. We didn't go deep into Disney earnings, but when I looked at it over the weekend, dude, Disney parks are at a record high. People are going to the Disney parks with their families. And Disney parks are pretty damn expensive, dude. Like that is actually, I'm joking with Rick, but that is a real economic indicator of a recession if people stop going to the Disney parks. And although Rick, which is a relatively small company, it's not that big of a deal, Disney parks going down year over year would be an actual economic indicator of like some weakness. Disney parks are at an all-time high. It's doing great. So it's pretty incredible to see the momentum in the broader ecosystem for the consumer demand, but it's not slowing down yet. It is not slowing down yet. By the way, we got a Tesla piece of news from CNBC. Tesla is hiring robotaxi test drivers in New York City, but the company hasn't applied for permits. So you're getting robotaxi test drivers. Tesla's hiring them in New York, as per CNBC, but the company has not applied for permits yet. Tesla right there up about 2%, 344 in the pre-markets. They're probably doing Disney on BNPL. That is possible. BNPL is growing like crazy. Klarna, Robinhood has a prediction market of which company is going to IPO first, and they have Klarna up there. They have Discord up there. See, I want to say Discord, but I don't know if they're going to. We just haven't heard about them going public. I think Klarna has a shot of being one of the names that goes public. I would really like Canva to go public. Like, really enjoy if Canva went public. But it might not be them yet. All in all, I think we're seeing that this is a really good market for IPOs. Bullish is going public. Is that today? I think that's tomorrow. BLSH. That is a Peter Thiel cryptocurrency exchange that is going public. So we're going to see what that one looks like as well. So Robinhood has Klarna, Discord, or Cerebras. And right now, Klarna is in the lead with 83 cents. It's today. Oh, it is today. Okay, so that one's going public today. I did not apply for that, but for those that did apply for that, you'll see what you get. BLSH, they're raising 800 million, and they're going public at about $30 a share. Valuation is $4 billion. So they are trying to get some money. Palantir and Sampo, they have signed a multi-year expansion of their partnership in Japan, where over 8,000 Sampo employees use Foundry daily. The platform supports senior care, revamps claim processing, and uses AI agents for automated underwriting. Expects to boost Sampo's annual financial results by 10 million. This follows a 50 million expansion in 2023. This is a really big deal. It's not some massive partnership that's going to get a lot of headlines. But for those that don't know about Sampo, it's tomorrow. Okay, that's what I thought. I thought it's tomorrow. Yeah, okay, so bullish will be tomorrow. The IPO, we'll take a look at it tomorrow morning. Sampo was one of the first partnerships that I studied back in 2021. And essentially, Palantir was the operating system to help a lot of the elderly people that are at the Sampo, essentially what you would call nursing homes. And there's a very older population in Japan. And I'll never forget when I was doing my DD on this partnership, like, there was a man who was not sleeping on time. Like, he was getting way more sleep than or he was sleeping way too much. And as a result, he kept waking up late every day to take his drugs. And the nurses in the video, they were talking about how they used Foundry to do predictive simulations on what was happening with his sleep pattern. And they found out he was sleeping way too much. And that was really unhealthy for someone who was like 85 years old. And therefore, they were able to adjust his sleeping schedule. He was able to take his drugs on time and quite literally extend his life. And that was because of Foundry. So from that perspective, I think this is a really important partnership for Palantir to expand their international offerings in Japan, which they have a very good tie with the Japanese government as well. Sampo actually owns a ton of Palantir. They don't own as much as they owned before, but they did own a decent amount of shares. And basically, the partnership is saying that they're going to boost their annual financial results by 10 million. And that's what you want to see. You want to see Palantir get deals where their customers are saving money, which is the reason to justify paying Palantir the money in the first place. So it is nice to see this partnership with Palantir and Sampo. BMNR is number 2 trending on StockTwits. Dude, this stock has just captured people's imagination. I mean, it is pretty incredible. Wow, 63.48. It did hit 70 yesterday. Then it got dumped into the end of the day. But it is getting some momentum. And then Circle, Circle helps out. BMNR is a crypto play. When you get Circle, that's getting this type of momentum that it's getting as well, up 15%. Stablecoins, by the way, one of the big beneficiaries of stablecoins are Ethereum. I mean, it just continues to put more excitement into the overall ecosystem for Ether. And now we're seeing the big boys buy in. Now you're seeing the big boys buy in. When you see $1 billion of inflows in a day on Ethereum, you're seeing the big boys buy in. By the way, not only were there $1 billion of inflows, there was 135 million of liquidations on Ethereum yesterday. So as the shorts have to cover, that's also pretty bullish for Ethereum as well. It's because Rick is transitioning to online sales via super chats to emit for $1. Yes, exactly. That's what that's what's happening for Rick. Now, in terms of the companies that had earnings yesterday, we got about 5 minutes until the market opens. Again, not the best earnings for some of these companies. Archer down 4%. Grabs up a little bit right here. They didn't have earnings, but they're up a little bit. SoundHound is down a little bit. They were up 17%. The other company that had earnings yesterday besides Archer was Oklo. Their earnings were Oklo down 3%. Again, that stock is up 200% year to date, so no one can complain that much. ASTS also, they missed by 80% on the top and the bottom. That stock's up 10%. So ASTS shareholders do not care about the miss on the top and the bottom. The one that was ugly yesterday was Big Bear AI. 32%. It's at $4.70. What do you guys think? Does this one keep pumping or dumping? Big Bear AI. And who's buying the dip if you're buying the dip? Who's buying the dip And do you think it continues to pump or dump? I mean, it's down 32% already, but does this one continue to get hit? Again, their guidance on revenue is now negative 11% versus 5% expected positive. And so I think that's why the street's like, hey, I would not be surprised if it recovers because there is a cult around Big Bear AI, but those earnings were just not good. This was just not a good quarter. And I think you might get the street to not be that excited about it. Tassos, man, thank you for the $2 super chat. Admit, do you have spreads on Grab or just calls? I have spreads. And no, I'm not rolling my spreads. Some people are asking, are you rolling your spreads? No, I'm leaving it. 750.10, Jan 2027. I know the stock has not been cooperating yet, but I will give it till mid 2026 before I think of exiting those spreads. If we get to 750 minimum, the spread will make money. $10, it makes a lot of money. I still think that is possible by Jan 2027. Doesn't look like that right now, but this is also part of taking a risk when you get into an investment. So we're going to see how that one plays out. But I have been buying a lot of Grab shares. So I've just been buying a ton of Grab, especially below 5. And I believe that one will play out. CPI came in at 2.7 versus 2.8. Again, for those that are asking, Monday is down 30%. So there is a growing concern around some of the software investors that software is being eaten up by SaaS. I don't know if that's necessarily true, but you're seeing with certain platforms like a Salesforce, which is not down 30%, but still been pretty bad over the past couple of weeks. Monday.com, which is a productivity tool, down 30% as well. The Trade Desk not doing the best. I mean, you're just seeing a growing concern that, hey, is AI commoditizing software as a service companies, and are these business models broken? I don't think that's true. I think these companies will survive even if their guidance is not the best, but it also gives you another reason for why Palantir is getting its multiple. Software as a service companies are tanking. Big Bear AI is tanking. C3 AI is tanking. I mean, Palantir is a SaaS, but they're not a traditional SaaS because they're a pure play AI play as well. And then all these other AI companies that people thought were competitors to Palantir, quote unquote, the next Palantir. I mean, dude, look at the growth rates. Like, we don't even have to really have a discussion on the qualitative elements of the bit. The growth rates are not even somewhat comparable. C3 AI and Big Bear are growing negative year over year at this point, and they have AI in their name. So I think part of the reason the street's piling into Palantir, it's the 4th most traded stock in the market, is because there's just nowhere else to go for a lot of this exposure. And that's why it's getting some of this momentum. So that's what we got in the software world. All right, folks, let's get into it. 9:30 a.m. Thank you, everybody, for being here. August 12th, the stock market is now open. All right, wake your ass up. Palantir, 185. That is green, up 2% on the day. Bitmine, up 7%. 7% is green. Tom Lee raising $20 billion today for the ability to buy more Ethereum. The street loves it. That's up 7.5%. The company that Peter Thiel bought yesterday, a 7.5% stake, that is up 80%. ATNF, it is a biotech, but they also raised some money to build an Ethereum treasury, which is why Peter Thiel looks like to have taken a 7.5% stake. That is up 80% as we get into it. Oklo down 2%. ASTS, wow, 14%. ASTS, 14%. Monday.com, it was down 30% of the pre-markets. Now it's up 4%. So you're getting a little bit of green. Robinhood right here, 115.79. That's trying to get back to 116. Big Bear AI down 30%. It was at 470. Now it's at 490. So you have a little bit of the dip that's getting bought right there at 485. We'll see if that can hold, but that one's still down 31% on the day. Grab is up 1%. SoundHound up another 2%. SoundHound has now been green 3 days in a row to the tune of almost 35%. That is incredible. Or actually more than that, 47% on SoundHound, because they had a 30% day and then a 17% day. Absolutely incredible for SoundHound. That is green. Circle, great earnings today. Great earnings today. That's up 15%. SoFi back to 23. There you go. There you go. SoFi back to 23. We were there for a little bit yesterday. Got to see if we can hold 23, but not that bad. It's starting to normalize that 23 level, which is really nice to get there. Robinhood back to 116. We were at 117 yesterday. So Robinhood right there, 115.30, trying to get back to 117. Dutch Bros is up 1%. Arista's up 0.5%. Eli Lilly's up 1%. Tempest AI, that's up 2.75. S&P 638. We're green on the S&P. C Limited, another company in Southeast Asia. They absolutely demolished earnings. Incredible growth across the board. Southeast Asia is a very strong growing economy. Grab is not putting up the earnings that C is putting up yet, but I think eventually they will. And as a result, C is getting rewarded by shareholders, even if it is an international stock that is up 18% on the day. And they deserve it. They deserve it. That was an incredible earnings. Lemonade right here is up 1%. Netflix is up 0.5%. Amazon up 0.5%. Uber's up 1.4%. Nvidia's down NVIDIA's down on the argument that the Chinese regulators reportedly are stopping Alibaba, Tencent, and ByteDance from buying their chips. I don't know how true that report is, but that's probably the reason why it's going a bit red. Is AMD red? AMD is also red on the day. CPI again came in at 2.7 versus 2.8. And that's why the market is also green right here. Rate cut probabilities are now 90% in September instead of 82% this morning. So you do have those increased probabilities. SoFi now breaking out above 23. Rocket Lab, are we green on Rocket Lab? Rocket Lab ASTS is up 14%. Let's see if Rocket Lab can follow. Yeah, that's up 2% as well. That's up 2% as well. Rocket Lab is green. Duolingo, my goodness, this one is just disgusting, bro. This is basically where it was at before earnings. This is basically where it was at before earnings. I mean, this is just stupid, bro. This is like, does the street really think 40% revenue growth is going to get destroyed by GPT-5? Like, I don't know, dude. This is just, it's weird. The narrative on them is not good. And I don't know. I don't know if that narrative changes, but the growth is pretty damn good. Tesla right here, 342. You do have a red candle from 345 to 342. Is Grab going green? Grab getting a little bit of a bid. Grab right here, 492. I did buy more Grab yesterday. So I've been buying, dude. I've been buying. Under 480, I'm definitely buying. Under 5, I've been buying. I buy more under 480 or that 485 range. I don't know when the stock's really going to get a bit. Oh, but one thing I will say about Grab, their short float increased by like 20 million shares. So one thing to understand about this, based on some of the research I was doing last night, the shorts are in control of the stock right now. I know that's hard to hear. Robin had almost at 116, but the shorts are in control of the stock. And to me, the shorts are consolidating it as the institutional investors continue to buy more, because all I'm seeing are 13Fs and 13Gs of people buying more Grab. So eventually the shorts will let go of it. It might take a catalyst for that to happen. But unfortunately, if you don't want to enter into something that is dead money, Grab is definitely done dead money while the shorts are in control. Don't know when the shorts will not be in control, but as of now, that's the case. And so to me, that's accumulation phase. And to me, I'm like, all right, it does not deserve to be anywhere below, in my opinion, $6 after those earnings. But that is accumulation phase for me. Palantir right here, 185, SoFi 2311. There you go. Hoodie breaking over 116. Breaking over 116. Meta, are we getting some green on Meta? Wow, Meta, 784. That is right before, that is right at the price it was after earnings. Right at the price it was after earnings, which is very nice. Very nice on Meta, 785. You know, Microsoft took a nasty dump since earnings. It was at 560. Now it's at 525. Meta has not given back its earnings pump at all. It went from 700 to 785, and now it's at 786. This is at 52-week highs right now. We just hit 52-week highs on Meta. So market has not been giving it up, which means it seems like people are excited for Meta. Archer, are we green on Archer? Archer, we didn't have any revenue. We did have 17 cents of a loss of EPS versus 20 cents expected, so it was a beat on EPS. CEO came out and just reiterated the stuff and the progress that they've been doing in the company, so that's up 2%. But we didn't get any like massive numbers on EPS or earnings. And then ASTS continuing to benefit. Dude, I don't know why the expectations for ASTS were as exaggerated as they were. The street wanted 6 million in revenue. ASTS came up with 1 million. And then the street wanted like 40 cents of EPS. They came in with like 7 cents or something. So they missed horribly on the top and the bottom, but like no one cares. And no one should care, because this is not a company that's supposed to be putting up massive earnings results anytime soon. At least not until they scale from 5 to 45 satellites in fiscal year 2026. So ASTS up 20%. I mean, I don't know why it's up 20%, but I don't know why the expectations were as egregious as they were. And ASTS missed by 80%, but the street doesn't care. So ASTS right here up 20%. Are we back to 117? There you go, baby. We're back to 117. Let's see if we can get 118 on Hoodie. Let me check resistance. We got to 118 a couple of days ago. Let's see. Does Hoodie have the juice to give us 118? I think it does, but we got to see. 118 resistance on Hoodie is 12,000 shares, folks. It's not a lot. It's not a lot. SoFi, are we moving past 23? We are indeed. Let's check 24 resistance on SoFi. And let's see what momentum we can get there. SoFi 24. Again, we hit 23 yesterday. 24. 123,000 shares. 123,000. So you got a lot of shares there, but very possible to break above it. ASTS call was very bullish. Yeah, I mean, I would imagine if it's up 20%. We didn't fully listen to the call. We kind of got bored after like 5 minutes. We stopped listening to the call. But for that Space Mob who listened to it, If it was really bullish, well, then there you go. Stock's up 17%. Again, this stock does not trade on EPS or revenue. Same thing with Upseller, right? So some of these stocks you just can't worry about. Like even Archer. Archer doesn't trade on EPS and revenue. They're too young of a company to care about that. So although those results are relevant, they're just not the determining factor, I think, on the stock. Meta right here, 784. Meta, again, doing a phenomenal job. Wow, Duolingo. I think that's a 52-week low, folks. Is that a 52-week low? That is... Okay, in March it was at 263, but it's, I mean, still, dude, it went from 540 to 325. This is not a 52-week low, but it's still pretty damn low. At least it's a 3-month low. It's a 3-month low. My goodness. Nebius is green. That's up 5%. Nebius is up 73.20, was at 76 yesterday. On, that's the Nike competitor in sneakers. They are up 10%. They were up 15%. They had a good earnings. Growing sneaker revenues 30% year over year, but that is up 10.3%, which is not too bad. We did get a new BLS commissioner yesterday as well, so the street's probably factoring in what that means. And then Googs, are we back above 200? I think we are. Oh, wow. Googs is breaking out. We haven't seen 203 since January. Yeah, since February 4th, we haven't seen 203. Let me check 204 resistance. I mean, a lot of people got a lot of chances to buy Google. Class C, by the way, is already at 204. Below 170. 204 resistance. 15,000 shares. 15,000 shares on Class A. Let's see if we can get there. Hoodie. She's going for it. She's going for it. 117.15. She is going for it. So we are green across the board. What's red? Duolingo's red. BMNR. Oh, BMNR goes red. Okay. So we were at 63. Now we're at 58. So BMNR is red and Big Bear is red. But Big Bear, talk about a little recovery. 475 to 532, back above $5. It was down 40% almost. Now it's down 25%. So you have people buying the dip. Hims is red. Big Bear is red. BMNR is red and Duolingo is red. That's what you've got red on the day. MicroStrategy a little red. Wendy's is red. Oscar's a little red. And Dutch Bros is red. Outside of that, you're seeing a ton of green. S&P is 20 cents away from 640. That would be, oh no, we touched 640. Was that pre-market? No, that was pre-market. Okay. So in the actual market open, we are 20 cents away. SoFi, 23.40. And then NVIDIA is trying to go green. Now, the reason HIMS is down, well, I don't know if this is the reason that it's down, but the reason it looks kind of ugly, I showed this again in the beginning of the show, but Andrew Dudum did sell 30 million worth of stock. It was the highest amount of stock that he ever sold. CoreWeave earnings after the bell. Lemonade 52-week high, but we got CoreWeave earnings after the bell. And basically, he told someone to go all in on his stock. Not literally, but by responding with the comment hello, which is what the tweet said he needs to do for someone to buy a stock. And then 2 days later, he sells 30 million of it. Just not a good look, bro. I don't really care that he sold stock. It is what it is. Like, insiders are allowed to take profits. Google breaking 204, but it did look weird, bro. It looked very weird. And so, yeah, that is, I mean, I don't know if that's the reason why the stock is down today, but definitely not the best look for him. There you go. Google above 204. Lemonade 52-week highs up at 53.30. CPI came in at 2.7 versus 2.8. Grab potentially trying to go for $5, 493 right here. And then SoFi up 4.5% on the day. The market liked this CPI. And then NVIDIA just went green. It doesn't matter if it was a pre-planned selling plan. Why would you tell someone to go all in on your stock knowing 2 days later the filing is going to come out that you sold 30 million of the stock? Like, it's just weird, bro. Again, it's not a big deal for him. I'm not selling my HIMS because of that. It's just weird. Like, as a shareholder, it left a salty taste in my mouth. It's like, what is that, dude? Like, why would you even respond to that in the first place? Like some random account saying, hey, say hello and I'll buy your stock. It's like, dude, you're a CEO of a $12 billion company. Like, why are you responding to that? This is weird. So I didn't like it. But nonetheless, I don't think it's the biggest deal for HIMS shareholders. I don't know why HIMS is down. I don't know if that's the reason, but HIMS is down right here, down about 2.7%. But again, HIMS is volatile. This thing could go to 60 tomorrow. You know, that's the nature of HIMS. SoFi right here, 23.40. Meta 787. Grab 493. Duolingo continues to get wrecked, down 6%. Down 6%. Ugly, bro. Super ugly. Yeah, it basically read, hey, buy my stock because you're the exit liquidity. That's what it felt like, dude. Yes, HIMS does have bigger problems than the CEO tweets, but it definitely read in a weird way. SoFi 23.34, ASTS 54.93, 55, ASTS up 20%, Archer's up 2%, and Robinhood, she's going for it. She's going for 118. I guess the street likes CPI. I guess the street really likes CPI. The fact that Google is breaking out above 200 shows you the street loved CPI. The street loved CPI. 2.7 versus 2.8. Now, again, core was a bit aggressive, 3.1 versus 3.0. But the headline of 2.7 is what the street really cares about. And there's a lot of things that factor into core, so that could be negative over the coming months, or at least come in line with expectations. But the headline is what the street cared about, and that's what we're getting. Robinhood, 117.60. Let's see, can we crack 118? And we're going to see if we can get some of this momentum. Phil Masters, thank you for the $10 super chat. What's the next AI stock you think will grow like Palantir? I honestly have no idea. I know a lot of people have been asking this question. I have no clue, dude. Arnie, I think, tweeted it best a couple days ago. He said the next Palantir is Palantir. And, you might not want to buy Palantir because of the valuation. I get it. It's expensive, but I don't know another AI company that's growing 45% because all the companies with AI in their name are not growing at all. So it's just very hard to find AI software names that are growing at these levels on the top and the bottom line, and Palantir is doing it. And that's another thing that's shielding them from this whole software is dead narrative that some of the street is worried about. Like, Palantir is not a traditional SaaS company, and they're not growing like a traditional SaaS company. And that's another reason I think it's catching a bid. MP, that one, USAR had a good earnings yesterday. MP, that's up 2%. SoundHound, is that one moving? SoundHound, wow, 2.3. SoundHound, this thing was like $9 last week. Now it's at $16.27. Not too bad. ARM, another semiconductor name, that's up 0.5%. That's green. CoreWeave, you're going to get a big earnings today by CoreWeave. This is going to be a very important one. JP Morgan upgraded them from 65 to 135, down about 3.4%. Let's do a poll right here. CoreWeave pump or dump. I have no idea what to expect. I'll do a little bit of digging before the earnings. We also have Technical Tuesday today. So we will look at the earnings and then we'll have TT. But what do we think? Pump or dump? What do we think? Do we have a Trump headline right now? Hold on. Do we have a Trump headline on the Fed? Is this accurate? Trump. Oh my goodness. Trump considering lawsuit against Powell over the Fed building. Oh my goodness. He just posted on Truth. Oh my goodness. Dude, he was just at the building with him. He said they let them renovate. Now he's considering a lawsuit. Okay, Trump tweet. Here we go. Figma up 5% as well. Here we go. Jerome Too Late Powell must now lower the rate. Steve Mnuchin really gave me a beauty when he pushed this loser. The damage he has done by always being too late is incalculable. Fortunately, the economy is so good that we've blown through Powell and the complacent board. I am, though, considering a major lawsuit against Powell to proceed because of the horrible and grossly incompetent job he has done in managing the construction of the Fed buildings. $3 billion for a job that should have been $50 million. Not a good look for Jerome Powell. And of course, the market starts to go red. Of course, the market starts to go red. What is he saying, bro? He was with him at the building, and he confirmed that he's going to let them do the renovation. Like, to me, he's just saying stuff at this point to say stuff. Because this sounds ridiculous. All right, let's see if I don't think that's hopefully enough to cause us red on the day. Hopefully we get a little bit of a recovery right here. But you are getting some red right there. Hopefully that's not too bad. All right, that's what Powell said. Powell said Trump said he's thinking of a lawsuit against Powell on the building. And, the hey, you must lower rates part. Trump says that every single day, so that's not new. HIM's down 3%. But the lawsuit part, that is something new that the street did not think was going to happen. S&P 630 now. Do I think Trump's actually going to sue him? No, I don't think Trump's going to sue him. I think he's just saying that to scare him. But I don't think Powell's going to take that seriously either. 638.73. He wants a hood dip. Well, he got a hood dip yesterday. We closed at 113 yesterday. We fell from 117. But hood has momentum, dude. Right back to 117. I mean, I think she wants 120, dude. I think she wants 120. Meta all-time highs. My goodness. Can they please split the stupid stock so I can buy 100 shares of this thing? Meta 789, 790. Dude, if they did split the stock, I think this thing would be above 800 by now. But maybe Zucks just wants to see his stock get to 1,000 and be like, look at me. I got $1,000 stock. I mean, maybe that's what he wants to do. Because you would think that $700 they would split. Maybe he wants it to go to like 2,000, or maybe he wants it to not split it for like a decade or something. Even Google and Amazon, the first time they finally split in a while was back in 2023. I think they both did 10 for ones, if I'm not wrong. Yeah, they both did 10. No, Amazon did like a 20 for one, I believe. Amazon was almost 4,000 a share at one point. And it just became more like, who would buy Amazon at 4,000 a share, bro? It's hard to buy this thing at 4,000. You need some accessibility. 219 on Amazon, that's down. 20 for one. Yeah, they did 20 for one. There you go. And so that one would be easier to buy if Meta splits. Rate cut probabilities, they were at 90%. Let me see if they changed. Wow, folks, they're at 94% in the midst of 20 minutes. We got to change. This is why the market's going up right now. This right here, this is the CME Fed future probabilities. This pretty much determines almost 100% of the time what the Fed is going to do. And based on that CPI, we have a 94% chance of a rate cut. That's why the market's excited. That is why the market percent. Yeah, Google also did a 20 for one. Google was at like what, 1,500 or something a share. So Google and Amazon both did 20 for ones, and that's what got the stock down to a bit of a more accessible level. S&P 637, Palantir 184, Hoodie just below 117, SoFi just above 23, Microsoft 524, Grab 491, Duolingo just disgusting. In 1 minute, I will pull up the stock draft chart. I'm probably going to be down today based on Duolingo. This is the worst I think Duolingo has ever been since I picked it. In 1 minute, we'll get the updated price at $9.50. My goodness. My goodness, dude. Yeah, it's ugly, dude. I mean, if this goes below 300, maybe I get a bit more interested, but I don't know. Is AI really killing Duolingo? Like, what is the narrative there? I'm going to try to get some of the equity reports and read and see what people are saying. Again, I don't own it. It's in my stock draft portfolio, so I'm annoyed, but this low on that type of growth just feels a bit weird. C Limited right here up 18%. Monday's up 2%. Oklo's up 1%. Bitmine still down 2%. So Bitmine's tanking, not because I think they're doing it at the money. They could be doing the at the money right now, like dumping shares to be able to get money to buy Ethereum. So an offering. But I think they just said they're offering 20 billion. So the perception of that is, hey, they're going to do an offering soon. Not all 20 billion at once, but they're going to be raising money soon. And so people might be selling it off before Tom Lee dilutes, right? That could be the argument for why this one is down 2%. Tesla, by the way, goes down 1% as well. And that's red. NVIDIA going down, markets following. Yes, NVIDIA, I mean, that is a little move on NVIDIA. It was at almost 184. Now it's at 180 based on maybe that China headline. That hurts CoreWeave, Nebius. That hurts everything, dude. Robinhood's dropping a little bit of that. Hurts everything when NVIDIA takes a hit. But I don't think that China headline is as serious. So we're going to have to see what the market thinks about that. 20 billion on a 6 billion market cap is tough for shareholders. I agree. That's why the first thing I saw when I woke up this morning was a $20 billion offering by Bitmine. And I was like, okay, that's aggressive. But it also goes to the point of why Bitmine has moved the way it's moved. I mean, Tom Lee's buying up as much Ethereum as possible, right? And so at the end of the day, he's going to use shareholders for liquidity, but he's going to be doing it in a way that gets him more Ethereum. Yeah, Celsius has done great since earnings. Celsius, this stock has outperformed a lot of stuff this year. Celsius, look at that, 100% year to date. Just incredible. 42 to 55 on earnings. It's done well, dude. I mean, it topped out at 99 last May. You kind of had to leave at the right time, but it bottomed at 18 in February. And with the acquisition of Elon, which also really helped them out, it's been a 300% gain from the lows, which is not too bad. Circle as well, losing some of its steam. It was up 18%. Now it's up 7% on the day. Where's UNH? UNH is up 2.4, almost 260 on UNH. There is no perfect time to buy BMNR. I mean, I guess the quote unquote perfect time would be after they do a massive offering and the shares fall, because you buy that dip, right? Because then you're not buying at the top before it falls. But then they could do a massive offering after that, and then if the shares rise, they could do another massive offering. So like this is why it's such a liquid stock. People are using it as a trading vehicle. I think more than people are using it as a buy and hold. Now, there's probably some people that are just buying and holding and trust Tom Lee, but I think a lot of people like it because they can go in and out of the stock and really make a lot of money off of it, which is what you need in a stock that's super liquid. But long term, if you think Ethereum's going to 15,000, you buy this and you hold this. But then you can't cry if it goes down or up a lot, because they are going to do what they need to do to buy more Ethereum. And so it looks like that's what we got going on. Salesforce right here. Again, Salesforce, I talked about this yesterday. I think Salesforce is losing their AI narrative. Wow, it's down another 2%. My goodness, dude. They didn't even have earnings yet. Salesforce market cap, $217 billion. I mean, look, I was telling Steve about this the other day. I was like, I don't think people think Agentforce is like a real thing. I think it's just like whatever. And Salesforce is not growing nearly as much as some of these other software companies. Arista, by the way, that's up, and A-Lab's up 4%. Arista is up 3%. So both of these data center plays are getting some love as well. NVIDIA trying to recover, now back to 181. But I think people are just bored of Salesforce. There's nothing to be excited about. And although the numbers are great, and I do think it's undervalued, like if AI is the narrative and there's no AI excitement around Agentforce, which maybe there will be on this earnings, but to my understanding, people just think of it as a chatbot, which is not really AI. That's what I think people are not that excited about. So we're going to see. I do think they're undervalued, but it's just not an exciting name to get into, and there's not a real AI narrative that's deeply associated with it. Salesforce right here, that's at 227. NVIDIA 181. What about ServiceNow? ServiceNow I don't understand as well as someone like a Tanner does that's in his draft portfolio. The problem with ServiceNow, though, is their growth has been amazing, but their growth is not as amazing as you would expect. So they are doing really well with increasing customers' margins with AI. That's what Bill McDermott keeps saying every time on the earnings call, that's why customers love us. But they're only growing like 19%. Now, look, 19% is not small growth, but it's not like 35, 45% growth. And I think if you're not growing that fast in the age of AI, why do you get a multiple is the question from the street, even though it's a great company. And it's trading at the historic SaaS multiples that it should be trading at, 15 times price of sales. But it's just not, again, the most exciting when it comes to growth in AI. And I think that's why it's not getting as much excitement. All right, stock draft. Let me update this right here. So Matt's up 21.8% now based on ASTS. He's up 30% all time. ASTS is up 18% on the day. Tanner is up 7. I am up 16.6. I am down 30% on Duolingo. That is really hurting the portfolio. Steve is up 1% all time, and Chris is down 1.83% all time. So it's Matt, Amit, Tanner, Steve, and Chris for the ETFs right now. That is what we got. SoFi 2305, hoodie going down 115.69. Tried to break through to 118 or 117.50. Pouncer right here 183. All right, so you're getting some red candles across the board. You're getting some red candles across the board, but the S&P is still holding and trying to stay green. Where is PayPal today? PayPal is also up 2%. PayPal also up 2%. We didn't have any more super investors disclose their earnings or their holdings yet. We will get that soon, probably in the next literally 48 hours. But right now, the top buys as of last quarter were United Health, Google, TSM, Thermo Fisher, Meta, Texas Instruments, NVIDIA, Applied Materials, US Bancorp, and Tyson Foods. So far, those are the top buys. Will the market even react if Russia, Ukraine announce a peace deal? So Friday is going to be important. Trump's going to be in Alaska talking with Putin. I think the market will be very happy if we get a Russia-Ukraine deal. I don't know if like the stock market goes up dramatically, but I think the market will have a lot more increased stability based on geopolitics not being as big of a concern. I don't know if Trump's going to be able to get a deal done. Like a deal where the war comes to an end would, as Trump announced yesterday, require a reorganizing of the lines of the borders. I don't know if Ukraine easily agrees to any of that stuff. I don't know if there's any compromise that's meaningful there. So we're going to see probably by Saturday, Sunday, and get an understanding of what happened in this meeting. But Trump is pretty desperate to get a deal done. He really wants there to be a deal. And, we'll find out. We'll find out on Friday how good he is at making a deal happen. But it just feels like it's going to be hard. So both sides are really going to have to come to an agreement to make this happen. CoreWeave right here down about 4%. Again, on CoreWeave, the biggest thing to watch out for CoreWeave is what is their CapEx in relationship to their revenue? Last quarter, they were spending 3x more on CapEx than revenue. Again, CapEx, GPUs, CoreWeave buys a bunch of GPUs, resells them, resells GPU training time. Like they have to spend a lot on money, or they have to spend a lot of money on infrastructure, which means they also have a lot of depreciation expenses, and that's what hurts their profitability. But last quarter, they spent 300% more on CapEx than they did on revenue. So I think this quarter, the street wants to see maybe a little bit of a reduction of that ratio for this to get exciting. But the revenue growth is also phenomenal. So if they can keep up the revenue growth and make it faster than the amount of CapEx they're spending, I think that's what the street's going to care about when it comes to CoreWeave. And so we're going to see what ends up happening there. Any thoughts on the bullish IPO? I am not a fan of it. I will not be buying. I think it can do well. I kind of see it as exit liquidity, to be honest. I don't know anyone who uses Bullish, the crypto exchange. So I think it's a random company that's decided, hey, it's time to go public. Peter Thiel's associated with it, so people are excited about it, but I don't think there's a big thesis there. But it could do well. The ticker symbol is bullish. So you could get some momentum. Palantir, are we getting a little red? Again, Palantir signed a contract extension with Sompo, which is very good for them in their international business in Japan. That one and now goes red on the day, 182.63. Google as well, losing some of its momentum, but still holding 200. And then Hims going down, Lemonade going down, Robinhood almost going red. I mean, you're seeing a lot of these names get hit as we get into the 10 a.m. hour, even though they were up about 15 minutes ago. Arista still up. A-Lab still up. NVIDIA, wow, below 180. They're taking her down. They're taking her downtown. They're taking her downtown. NVIDIA, 179.94. It's for institutional use. Okay. So how many institutions use this thing then? Does anyone have any stats? I mean, see, but I feel like people should know that too, right? Like the fact that most people think it's a crypto, like most people that I've talked to think it's a cryptocurrency exchange that competes with Coinbase and Robinhood for retail. It's like, no one even knows what, like, I think most people getting into this IPO, this is why I'm not getting into it, because I didn't even know it was only institutional. People don't know what this company does, dude. People do not know what this company does. NVIDIA now really getting hit. So how many institutional clients do they have? Like how big is this thing? Because, I mean, look, the biggest institutional exchanges that I know are Coinbase. They're not bullish. Like, I've never heard of this thing and never even heard of it in the institutional space either. So I think the IPO will do well, but I just don't think people know about it. I think people are buying it for the hell of it because it's Peter Thiel and it's bullish in the name. But I don't think it's like their website says the standard for institutional crypto trading. Is that? Or is that Coinbase? I don't feel like it's bullish. Amid bullish is a terrible situation. The spin is institutional, but adoption is zero. So many better solutions. Yeah, I mean, like BlackRock's not using bullish. They're using Coinbase to buy their Bitcoin and Ethereum. So it's like, why would I buy bullish over Coinbase unless there's some unique, exciting thing about their IPO outside of their ticker symbol being bullish? And that's where I get caught up. But I think it'll do well. I think it'll do well because Wall Street bets might get excited about it. NVIDIA right here, 179.63. That one's red. So they're really taking NVIDIA down right here. Why is the market angry and red right now? You know, why was the market super happy 20 minutes ago? I think just giving back some of the gains every day, even if we get them in the morning and we end up flat every morning, or every afternoon, I will take that for the month of August. I really will. I am not angry. If we end out August at 635 on the S&P, I'm okay, because based on all the historical data, S&P should be like close to 6,000 by the end of August if August follows the seasonal trends of being red. And so if we can just stay flat and not lose any money, I would be happy, because September is worse than August, by the way. So we got to survive September as well. But you do have Tom Lee that thinks 6,500 is possible for the S&P towards the end of the year. NVIDIA, 179.69. They are really taking her down 1.5%. UNH, is that going green if the market's red? UNH is going green. UNH, more deep value. I mean, you're going to see people pile into things that are less expensive, and UNH obviously is cheap, even if they've got some narrative headwinds, and that's why UNH right here is up 3%. Even though NVIDIA is down. Tesla, is that below 335? Let's see. Tesla is now below 335, 334. That's down 1.2%. There is a reason BlackRock bought partial ownership of Coinbase, not just a shareholder. Yeah, I agree. Again, I've just never heard of bullish in the crypto space. But again, maybe I'm not that deep in the crypto space. Maybe there's a lot more people that understand the business from an institutional side. I just think a company like that at $4 billion should not be public, dude. A $4 billion market cap crypto company should not be public. They just shouldn't. Unless they're a leveraged treasury that has the ability for an asset to go exponential. An actual operating business that's worth $4 billion in crypto should not be public, because we've seen too many of them that haven't been able to operate as a real business. They should be private. Even Kraken is thinking of going public at 15, 20 billion. Like, that's a mature company. Less than 5 billion market cap feels like exit liquidity to me. But I still think you'll have a lot of people trading that name. Amazon right here, 219, NVIDIA, 179.93, S&P, 637.69. Yeah, we looked at inflation already. We came in CPI 2.7 versus 2.8. Airlines increased, medical care increased, and used cars and new cars increased. Shelter also was the majority of the CPI increase. What decreased was energy, gasoline, natural gas, and electricity. Those came down enough for the street to be excited about CPI. But now you're getting a little bit of a red candle across the board, so kind of going flat from where we were before CPI. But at least CPI came in line with the expectations. Let's see right here from one of the White House economic advisors on what we've got on CPI, and then we'll keep going from there.
Inflation continues to be well behaved. Since the president took office in February, CPI inflation has been running at a 1.9% annualized rate, which is a totally normal pattern of behavior for inflation and for prices. And as you pointed out, look, there's just still continues to be no evidence whatsoever of any tariff-induced inflation. I think lots of folks who are expecting that, who are predicting doom and gloom, it just hasn't panned out, and it continues to not pan out for them.
There's a little evidence. I saw it in coffee. I saw it in tomatoes. You see it in photography, equipment, that sort of thing. But to your point, it's not filtering through into the headline numbers. And even the goods prices look better in July than they did in June. I guess the question, Chair Myron, is it coming? Because a lot of the economists still say, all right, well, these companies are still working off of their inventories. They had months of inventories. They can't absorb it indefinitely.
Well, there will always be relative price changes. There will always be one good or service gets more expensive and another one gets cheaper. That will always happen. But at the aggregate level, when you look holistically across the inflation data, there's just no evidence of it whatsoever. And that's an exact repeat of what happened in 2018, 2019, when, again, the same doomsayers, the same Cassandras were saying exactly the same thing, and it didn't pan out for them then. Thus far, it's not panning out for them again. Could it happen in the future? As I've said before, never rule out anything, but thus far there's no evidence of it. And the entire burden of argumentation is on the people who have been waiting since January 20th, the tariffs began, right? It's been a gradual process of different tariff regimes, but we started putting tariffs on various countries on January 20th and still hasn't panned out.
No, it hasn't panned out. But, one thing that did surprise people, what core numbers were a little bit hotter. I mean, nothing crazy, nothing extreme, but that core number is now the highest year over year since, I believe, January. So what does that tell you? I mean, does it concern you at all that it looks like the inflation numbers pretty much bottomed earlier in the year?
Well, let me say a couple things. First of all, if you look at core, as you just mentioned, two of the strongest categories in this month in terms of inflation were used cars and airfares, and neither of those have anything to do with tariffs. We don't import used cars from abroad in large scale, and airfares are on domestic services, basically, right? So they couldn't be farther removed from things. In terms of core overall, look, we've been doing a lot of thinking about just how much of this inflation is due to the illegal immigration that's occurred in the last few years. Our calculations are that the massive insurge of renters into an only sluggishly adjusting housing supply probably boosted rents by about 4 or 5%, right? And that's a significant contribution to overall inflation at a time when the housing stock adjusts only slowly, inflation is very strong, and you basically got an unchecked border with people just streaming over this country. So we think that there's a very strong reason for thinking of very profound service disinflation coming up in the near future as net migration has come to zero because of the president's strong border policies, and as we start sending numbers of them home. Right, and that's on top of the president's other policies of deregulation, expanding the capital stock through the incentives for investment in the One Big Beautiful Bill, energy abundance, keeping energy prices down. There's a whole of government approach to disinflationary policy that's going to be working its way through the inflation data and having a very profound effect in the near future.
Why wouldn't used cars and pricing in used cars be affected by an increase in prices in new cars?
Well, but there was no increase in prices in used cars this month in terms of in any material sense.
As an overall working theory, wouldn't you assume that if new cars get more expensive, people would turn to used cars, which would then inflate their value?
Yeah, they're substitutes, and a logic like you're describing would happen if the price of used cars had been going up, but the premise is false. If the price of new cars had been going up, but the premise is false. There wasn't any material increase in new car inflation on this month, which means it's just an aberration of the data, or maybe it's sort of, previous lags, and correlation between different measures of used cars working in their way.
Okay, so the report that I read from the BLS says that the indices that increased were used cars and new cars. So not sure what he means by that, but I guess he's talking about a potential lag in the data. But he did say new and used cars did go up in the month of July
through the system, but it's just really difficult to get to a point at which you could say any of the inflation is due in any economically meaningful sense to the tariffs.
Should we trust this data? The president cast a lot of doubt, politicized the head of the BLS. That's where these numbers are coming from.
Well, look, not all, but most economic data ultimately comes from surveys. And so there's always going to be an element of noise. There's always going to be an element of uncertainty. And unfortunately, that element of noise and uncertainty has increased in recent years. If you look at, we can sort of speak about revisions in the payroll, in the jobs data, because we get revised data for that. We don't really get revised data for the CPI data. Those never really get revised. The final number is the initial number is the final number. Of course, the seasonal factors get revised, but not the underlying data. And if you look at the jobs data, though, where we can speak of this, the birth-death model, for example, one of the big drivers of how you think about how job creation has occurred, has come from a run rate of about 5,000 or so annual jobs in the annual revision for the 15 years running into COVID, to being about almost 300,000 in the last couple of years, right? So that's an increase of about 70 times in the size of that error, right? So this is a degradation in the quality of the statistics that has occurred. And I think the president is dead right when he says we need to fix this. We need to make these statistics reliable. We need to make them believable. We need to make them credible. And I'm really delighted that that we're shaping up to be able to do so.
What do you think drives response rates higher?
Well, I think that and to be clear, this is not my equity. This is not my policy domain. But I think that we can start thinking about incentive schemes to drive response rates higher. I think that we can start thinking about ways to optimize the collection system, optimize the survey system, optimize the timing of responses. I think that we should be thinking critically about these questions.
Yeah, I mean, it's certainly response rates collapsed in COVID and just was never able to get back to those prior highs, which were already eroding before the pandemic. A lot of attention was paid to your paper from last year about Fed independence in the last few days. Can you talk about how you expect to be questioned about it on the Hill, and what your framework would be as to what kind of Fed is acceptable, as you say?
Well, I mean, look, I've always been clear that independence of the Fed is of paramount importance. But I do have a nomination going in front of the Senate, and I really can't speak about that and get ahead of the Senate process. And so I'm very happy to talk about administration economic policy. I'm very happy to talk about the economic data and the unrolling of the economy. But talking about the Fed is just not something I can get into right now.
Do you think you will get in the Fed before September 17th, which is the next meeting?
Again, that's up to the Senate, and I can't speak for them.
Do you think? I mean, look, the market, as I mentioned, is like 90% certain that we're going to get a rate cut in September. Though, there's plenty in this report, as evidenced by Carl Barkin's comments at the top of the hour. There's still a case, don't you think, to wait and see on tariff inflation, on services inflation, which we saw heat up a little bit, and the rent prices and the dental and medical costs area, that sort of thing. I mean, do you think it's a slam dunk that they're going to be cutting?
Look, as I said a moment ago, I do think that inflation has been well behaved, particularly since the president took office and completely changed the slate of economic policies in every part of policy that the executive branch can control directly from the presidency. However, as I said a moment ago as well, I just can't comment on current interest rate policy at the moment.
So who's paying? So I have shown yesterday. I showed a chart. 29 billion was collected into the U.S. Treasury in tariffs last month, and this just numbers above 150 billion year to date. Who's paying for it if we're not seeing it show up in a meaningful way in consumer inflation?
Yeah, well, look, in the long run, the arguments about tax incidents will hold sway. And in the tax incidence literature and public finance, the field of economics, the basic result is that the more inflexible party bears the burden of a tax or a subsidy or whatever it is, right? And at the end of the day, the American public is very flexible in terms of who they buy from. We can buy from other countries that we set varyingly high or low tariff rates on, and we can make stuff at home. That flexibility gives us the ability to shift the economic burden of something like a tariff onto the country that we're tariffing. So in the long run, I have every confidence that these tariffs will be borne, that the incidents will be borne by the countries that we're tariffing.
And then as far as whether it's working or not, do you have enough evidence at this point that the investment is coming through in a meaningful way to shift, say, the manufacturing outlook, the investment outlook in this country, that it's working in that way?
I think the commitments that the president has brought home in part of these historic trade deals speak for themselves. $500 billion here, $600 billion there, $1 trillion somewhere else. Pretty soon you're talking about real money. And those are real commitments. Those are coming through the tax incentives in the One Big Beautiful Bill to full expensing on structures, full expensing on R&D and new factories. All of those are incredibly powerful, and it's going to follow through.
Stephen Myron, we appreciate the time today. Thank you very much. It's good to see you.
Thank you.
All right, so you have the defense of this CPI report coming from the administration, basically saying, hey, you did not see major increases across the board. And they are right on most categories. You didn't see major increases across the board. And that's why you got the reduction in the headline CPI, even if core was a little bit higher than expected. Now, the most interesting part of that was when he talked about the new methodologies that they are thinking of, Robinhood below 114, around collecting data. And a lot of it has to do with response rates. He mentioned a couple of different new ways that we can actually create the surveys to be able to get those response rates. I think anything would be better than the current system that we have right now. And obviously the American people would want a better methodology to get better data so that we don't have to constantly revise it. But this CPI is not horrible for the administration. And now we have to see what the labor market looks like going into September. S&P 500 right here, basically at all-time highs. It's just below 639. All-time highs was 639.85. So even though you're seeing some red on NVIDIA, on Hood, on a SoFi below 23, on AMD, on Google from 204 to 201, Meta 790 to 780, you're still seeing the S&P creep back up and try to get to all-time highs, which would not be the worst thing in the world. UNH as well, catching a bid today, 262. There you go, up 4% on the day as people kind of pile into a little bit more of the risk-off trade, which would be UNH versus some of the other assets that are in the growth space. Now, one thing that's also important about small caps is that the hedge funds are having the greatest small cap short exposure that they've had in history. So IWM, the small cap ETF, which remember, this was one of the big things Tom Lee had in 2023. This one just didn't end up working out. That's up about 2% of the day. Hedge funds are now allocated in their short float. I'll get the exact number right here, to the highest level they've ever been when it comes to IWM. AKA they're going long large cap tech and going short small caps. And the reason for that is probably because, they don't think we're going to get that many rate cuts. And as a result of not getting that many rate cuts, you might think small caps are the ones that are going to get hit. Now, if we do get a lot of rate cuts and small caps don't get hit, that's a good thing. But do small caps really succeed even if we get rate cuts, or does the money still go into NVIDIA? I kind of think most people don't want to take a risk on. There's some people that obviously are buying small caps, but I think there's a lot of people that just don't feel comfortable buying small caps right here, especially since a lot of these companies have a lot of debt, unfortunately. And that's another thing that's getting hurt. So this is the exact stat right here. You can see on this chart, you have 20 billion of Russell 2K hedge fund notional short volume on the IWM. And it's the highest level in a decade. And obviously, it's, one of the highest levels in comparison to large cap tech. So you are seeing the small cap trade going a bit red. Duolingo, again, this one just, dude, I don't know if this deserves to get hit as bad as it's getting hit. Down 3%. It was down 7%. But it continues to get hit. That's good news. Less implied volatility when the big news drops. Great day for trading options. Yeah, I mean, look, if you're trading small caps in and out, you definitely have a volatile market that's helping prop up the premiums there as well. What happened with Archer? What do you think will happen by year end? Nothing happened with Archer because they don't really have earnings yet. All they did was reiterate everything that people knew already. So again, with a stock like this, you're buying potential. You're not buying an actual company that's putting up meaningful earnings because they're not really selling their product yet, right? So for Archer, for a Big Bear AI, for a lot of these names, you're kind of just buying it and hoping the future works out right. But that's why that stock is not, having an aggressive move. Big Bear now at 519, still down 27% of the day. So it's up from 470, but still down 27% on the day. Joby has been doing better than Archer. I will say that. I mean, Joby has been getting deals done, raising money, actually getting their eVTOLs into the air and doing test flights. And that's why that one has been starting to get a little bit more momentum, at least on their stock, than Archer. Is Trump still talking? Where are we getting Trump quotes from? Is he live? Did he tweet again? Oh, Trump just tweeted. Okay, here we go. It's a long one. Here you go. Okay, here we go. Oh my goodness. Content in chief, baby. Content in chief. All right, here we go. We'll look at the S&P while I'm reading this tweet. Trillions of dollars are being taken in on tariffs, which has been incredible for our country, its stock market, its general wealth, and just about everything else. It has been proven that even at this late stage, tariffs have not caused inflation or any problems for the country other than massive amounts of cash pouring into our treasury's coffers. Also, it has been shown that for the most part, consumers aren't paying these tariffs. It's mostly companies and governments, many of them foreign, picking up these tabs. But David Solomon in Goldman Sachs, the CEO of Goldman Sachs, refused to give credit where credit is due. They made a bad prediction a long time ago on both the market repercussions and the tariffs themselves, and they were wrong, just like they are so wrong about so much else. I think that David should maybe go out and get himself a new economist, or maybe he ought to focus on being a DJ and not bother running a major financial institution. For those that don't know, the CEO of Goldman Sachs, he is also a part-time DJ. So that's where that joke comes from. Oh my goodness. Oh boy. He just told the CEO of a company that's worth $230 billion to go back to being a DJ. I mean, content in chief, dude. Content in chief. Like, see, only Trump could, like, would Obama ever say something like that? Would Biden ever say, like, no president in history would tell the CEO of Goldman freaking Sachs to go and play some music instead of being the CEO of the company. Goldman Sachs, by the way, is up 3%. So maybe the market likes that Goldman's getting some attention right here. Up 3% right here, 740 on the day. NVIDIA, 180. That one's still down. There you go. There you go. So, okay. That's Trump's argument. Based on the CPI report, Trump is saying, also, trillions of dollars is a bit aggressive. I mean, the most we're going to get is $350 billion. And we're not even going to get that this year because we started the tariffs in the middle of the year. So trillions of dollars. I don't know if, literally we're accepting trillions of dollars. Maybe trillions of dollars of economic activity are happening, but we're not literally putting them in the treasury coffers because we're only collecting like 150 billion. But there you go. That's what Trump's argument is around inflation. JetBlue pumping today. This is a triple V favorite. JetBlue. This one, I don't think there's any headlines today, but that's up 9%. That's getting some green. So that one getting some momentum. S&P, folks, we are 50 cents away. Even with the red across NVIDIA and some of these other names, we are 50 cents away from all-time highs, which would be incredible to see 640 on the S&P 500.
And it definitely wouldn't be bad if we could get some of that momentum right here. Now, here's the thing. If CPI continues to be flat for the rest of the year and the labor market holds up, again, I do think Trump's going to get a lot of credit. I said this yesterday. Like, if somehow inflation doesn't go up and the job market stays strong and earnings stay strong as well, along with consumer expenditures not going down, you've got a really good scenario where inflation's down, or at least it's not up. Labor market's strong. Earnings are strong. Consumer demand's not going down. And if we're bringing in a couple $100 billion from the tariffs, I mean, that's a pretty good situation. Now, granted, there's a lot of ifs associated with that scenario playing out the way I'm saying it. And I don't know if it will play out exactly like that. But that is what Trump's argument is to the American people on how the tariffs are ultimately going to play out for the rest of the year. But we're going to have to see. This was a good CPI report. It wasn't a bad one. 2.7 versus 2.8. And look, the reason it could logically happen is if foreign governments and companies eat the cost of tariffs, consumers are going to eat some of the cost. But let's say foreign governments and companies eat a decent chunk of it. That's why Amazon tanked on earnings, because when Jassy was asked, hey, who takes the cost of tariffs? Jassy refused to say the consumer. He said someone will take the cost, but he did not say who. And that, to me, is implying that Amazon's getting ready to eat some of the cost because they don't want to piss off Trump. And if Amazon's going to eat some of the cost, that's not good for Amazon shareholders in terms of their operating margins, which decreased last quarter by a little bit, but still they decreased. It is good for the consumer, though, and it's good for inflation. So, I mean, we're going to have to see exactly how these tariffs ultimately play out towards the end of the year. INSM is halted. Is that a biotech? We have a drug decision on them later today. INSM, this stock. Okay, so that drug decision, I guess, will give us some data on this one. This one's $23 billion company, global biopharmaceutical company, engages in the development and commercialization of therapies for patients with rare diseases. All right, so that one's halted. ATNF, the Peter Thiel stock that he bought yesterday, that's up 62%. That's also an Ethereum treasury, another biotech, so that one's green as well. And you have Big Bear AI, that's still down 27%. BM&R goes green. Okay, there you go. Back to 60. That's up 2%. Grabby Grab trying to go for $5. She's trying. And then Ethereum back to 4,400. Back to 4,400. Can HOOD go to 130 in September? Look, my target is 120 this year. Could it go to 130 on S&P inclusion and a phenomenal Q3 earnings? Yes. I mean, we were looking at some of the numbers. If this crypto revenue holds up, they're going to do more than $1 billion in revenue in Q3. And the street's expecting them to only do $1 billion right now. So could it go to 130? Yeah. I don't want to be aggressive and expect that, because obviously HOOD has gone up a lot. The fact that it's holding, above 110 to me is great. But could I see that happening? Yeah, I could. I mean, S&P and a good earnings could get it there. It's just, as you can see, it's the 13th most liquid stock in the market. There's not, as Tom Lee's point last week was really good, there's not a lot of companies to invest in. Like, you realistically have 100 names in the public markets that are like meaningful long-term investments. There's a bunch of names to trade, but there's not a lot of names to invest in. And that's why I think HOOD and Palantir and a Tesla get its premium. NVIDIA, obviously, one company. So I think I definitely could see that play out. Why aren't you buying ETH? Look, I'm buying HOOD. I mean, look, I like Ethereum, but look, the way my portfolio is set up, I don't want to buy into something unless I make it a real position. And a real position to me means putting some real money to work. And so could I buy one Ethereum coin? Sure. But like then Ethereum goes from 4,400 to 4,900. I'm up $500. Okay, so what, right? Like, I'm not going to buy it just to be like, yeah, I own Ethereum. Like, no, that's a naive elementary way of investing. If I'm going to buy Ethereum, I want to buy a decent amount of Ethereum so that when it moves up, I can like have a decent gain. If there's a proxy to Ethereum, like a Robinhood, that I'm already deep in and I want to own more of it and it benefits from Ethereum, then I'd buy more Robinhood. So yeah, I don't really care. Like, you guys don't need me to buy Ethereum to be excited about Ethereum. I'm bullish on Ethereum. I have not said I'm bearish on Ethereum. I like Ethereum. I just personally buying a couple of Ethereum coins and then it goes up 10, 15%. Like, that's not exciting to me. But buying more Robinhood and that benefiting uniquely from Ethereum based on transaction volumes and staking revenues, I think that's better. So One is better than none. Yeah, I don't really agree with that. I don't agree because that the opportunity cost of that 4,400 can go somewhere else. You know, so it's up to personal portfolio construction. If you want to have one Ethereum and just hold on to that one Ethereum forever because it's going to 20,000, then sure. But if you want to be leveraged against it, like I kind of like people buying BMNR over Ethereum more because I think you get more upside in it, and you can actually establish like that $4,000 can establish a real position in BMNR that could get you some more upside against Ethereum. Now, granted, the risk to BMNR is the dilution, right? Whereas Ethereum, you don't have that risk. But yeah, I'm not just going to buy Ethereum for the sake of saying I have Ethereum. Just same thing with Bitcoin. Like, no, I don't have a lot of Bitcoin. I don't care. Like, I benefit from Bitcoin and Ethereum with Hood. And people hate when I say that, but it's like, I don't care. It's just not that big of a deal. I trust Hood. I believe in Hood. That's a company that benefits from it. I'm happy buying more Hood on the dip. So also, you can't sell calls against Bitcoin and Ethereum either. You know, so like it's just an asset that's in my portfolio that I can't really do anything with in the options market. And that's not that attractive to me either. So, but again, I'm bullish on it. And I do think buying it here is not that crazy. But buying a couple of bucks of Ethereum to say that you have Ethereum to me is not the most exciting thing. You can sell calls. Well, yeah, if you buy the BlackRock ETF, you can. But people are talking about buying legit Ethereum and Bitcoin itself. And I'm like, I can sell calls on Hood too, which benefits from Ethereum and has way better premiums than the BlackRock ETF. So look, again, this goes back to my point I was making last week. When you find a winner, you just stick with a winner. You know, you double down on a winner. And diversifying into Ethereum to me is not even diversification because Robinhood is so correlated with the crypto markets that if you buy more Robinhood, it's similar in terms of exposure. In fact, many times it's better exposure than the asset itself. So it's ultimately what you want to own in the portfolio. Yeah, but staking Ethereum and the yield you get from that is not as good as selling covered calls on Hood, dude. Like the covered call, the reason Hood is the 13th most liquid stock in the market is because the premiums are phenomenal. And if you can sell even far out of the money calls every week and you have a lot of shares, I mean, that can produce a lot of income. So that's what I'm interested in. I'm not interested in holding Ethereum in my portfolio to be like, oh, I'm a crypto bro. Like, I don't care. I'm curious about the crypto thesis and I want to talk about it and I'm bullish on where Ethereum's going, but I want to know where do I get alpha besides just buying and holding it. And I think Hood, at least for me, is one of the options to play that on Ethereum. Google right here, 202. So Google continuing to be above 200 on the Googs, and that is green. You are missing the point of it. What is the point? Please educate me. What is the point? Because I've heard this argument so many times of you need to actually have Ethereum or Bitcoin. And I'm like, dude, buying Ethereum and Bitcoin itself a year and a half ago would not have made me as much money as Hood. And if this is about money, what exactly is the point? Or is it about pride? You just want to hold Ethereum for the sake of holding it? Because let me tell you something. If Ethereum goes to 15,000, I don't think Hood's going to be stuck at $113 because a lot of that Ethereum that's bought going to 15,000 is going to be on Robinhood. And I don't think that's a hard argument to understand. That's not a hard argument. It's not diversifying is the point. It's not diversifying. If I'm buying Hood, which is crypto derivative, or I'm buying Ethereum, which is crypto spot, crypto proper, how is that diversifying? Now, if you tell me to go buy like, I don't know, Dell, that's diversifying my portfolio because that's in the server rack for semiconductor, for GPUs, right? If you tell me to buy Disney, that's diversifying into theme parks and content. But if you tell me to buy Ethereum over Coinbase, I'm like, that's not diversified. They're the same thing. They're not, obviously, they're not exactly the same thing, but they're in the same world and they're going to move up and down in the same way. Did I piss him off? You guys are trying to get me worked up. No, but you guys are going to get me worked up on this because everyone always says you need to actually have the asset. I'm like, why? Why do you need to have the asset? What's so valuable about owning the asset itself? Unless you bought Ethereum at like 1,200, 1,800, 2,000, then I get it. But if not, then there's ways to play these assets without buying the asset. And they're pretty logical ways to play them, in my opinion. S&P 639.15, that's up 0.5%. SoFi just above 23. Grab really trying to break 5, stuck at 494. And then Google above 200. ONDS, this is another company for the drone platforms. That's up 21% on the day. 21% on the day. I guess the argument you could make is that Robinhood has a really crappy earnings and Robinhood goes down and then like Ethereum stays above. So like if you buy Ethereum versus buying Robinhood, Ethereum stays strong. Robinhood could have a bad quarter, yada, yada. But if Robinhood has a bad quarter, it's likely because crypto volumes are down. And if crypto volumes are down, no one's buying Ethereum or Bitcoin. So again, they're just so intertwined with each other that I don't see the argument to separate them as easily right now. Is that essentially what the CEO of Robinhood is bringing to the platform, so you can actually own the asset? Yeah, I mean, to me, it's just more correlated. And I already have a big position in it. So I'd rather just buy more of it. Like, I'm not afraid of averaging up on Robinhood. I've done it the whole year. So that is why if it's correlated to Ethereum, that's what makes sense to me to keep buying more of it. Also, it's a business. I like owning businesses. Like, Robinhood's a business. I can understand the business, you know? And then if it benefits from Ethereum, that's not the worst thing in the world. Cactus says, I would view holding some as a life wrap. You always want access to a network with liquidity that doesn't rely on permission tax to that network and liquidity you wanted before you read it. Okay, so that is a fair argument, and that's what a lot of the crypto bros have told me. Unfortunately, I've never loved the argument. And so the argument is, hey, you want something that's permissionless, yada, yada. It's more sort of that, what is the word for it? Anti-tyranny type of argument. You know, if the entire financial system shuts down, then you have access to your Bitcoin, your Ethereum. That's why it's like not your wallet, not your keys type of stuff. I've just never cared about that, ever. And that's where I think you guys could have a real disagreement with me on that. Like, I've really just never cared about it. I've never, and that's where you could say I'm missing the point. Sure, I'm missing the point from that perspective. Like, I think the financial system will not go to shit. And I think it'll be, especially because the financial system, ironically, has embraced crypto to the point where Bitcoin and Ethereum are institutionalized. And the reason they're up so much is because of the traditional financial system. So that is why holding on to traditional financial assets that are correlated to those crypto plays, to me, is not horrible. But that is a legit argument. If you're afraid of the tyrannical government shutting down the financial system, you have access to a permissionless product. I think that's fair. Have you seen our national debt? Yeah, it's not good, dude. We are at 37 trillion now on the national debt. 37.2, my bad. Dude, we're going to get to 40 trillion by like the end of next year. At this point, dude, what are we going to do? Elon tried. He couldn't do anything about it. I don't know why they have that Doge clock there. That Doge clock is not even real anymore. Trump then did the big, beautiful bill, right? And that ruined everything in terms of the expectations of interest going down, or the deficit going down, unless we massively grow over the next few years. But still, we're going to have to prove that growth. And so I don't think there's an end to this, folks. And this really is your bull case for Bitcoin. More Bitcoin than Ethereum, because Bitcoin is a fixed asset. But this thing's not stopping. And as a result, I can understand why people want to be allocated heavily to Bitcoin. I understand why Saylor's buying so much Bitcoin, because if that thing's 60, 70 trillion in the next couple decades, which it doesn't look like it's not going to be, I mean, it feels like Bitcoin will be higher. You need some counter-cyclical trade, and so far, that is becoming Bitcoin. It's funny because Bitcoin started out as a leave us alone government to hope the government buys. Yeah, I mean, that's the ironic thing about the crypto movement. And it's like, it's pure irony, right? It started off as like anti-government, an anarchy, essentially. Like, there was an anarchy vibe to it. And now it's like, hey, can we establish a crypto reserve from the government? Because most people don't care about the anti-tyranny stuff. Most people care about the price go up. Like, let's just be honest. Most people don't give a shit that it's like, oh, it's a separate version of the government. It's like, no, most people care about, hey, I bought it at 110. I want to see it go to 150. And like, that's the majority of people. And that, as a result, they're going to be trading it more than they're going to care about holding it. But there is a subsection of, the Bitcoin population that really does think this economic debt spiral that we're on is not going anywhere. Here is the founder of Circle on CNBC this morning. Here's what he had to say about the company's results and their earnings as well.
Is available and its status is visible to the world on public blockchains in real time. USDC in circulation, the amount of transactions happening on our network. And so unlike most companies, we have real-time visibility into, fundamentals for how it performs. So in some ways, we've been accustomed to, hey, people analyzing, looking at that. But obviously, this is much bigger. It takes into account the entirety of the business, the multiple dimensions, et cetera. The other is that, as a highly regulated company, as a company that has been trying to always be at the forefront of trust and transparency, I've had to take a public role, not just with policymakers, but more broadly, so people understand this.
Okay, two questions. You're growing 52%. Is that sustainable? And at the same time, we should note that you did lose money this quarter. Now, I know some of that was this IPO, but what does that look like to you as the year goes on?
Yeah, I'd say a couple things. I think the first is, as you noted, USDC in circulation grew 90% year over year to the end of Q2, and it's been accelerating. So since the end of the quarter to Sunday, August 10th, we've seen it go from 61 billion to 65.2 billion, and I think it's more today. But basically, we've seen this acceleration in transactions.
Guys, I gotta stop it. We got some drama. We'll go back to this, but we got some drama. Oh boy. Here we go. Are you guys ready? Tech bros billionaire battles, baby. This is what we got. Sam Altman versus Elon. Sam Altman quote tweets Elon's post about Apple being biased against OpenAI. And he says, "This is a remarkable claim given what I have heard alleged that Elon does to manipulate X to benefit himself and his own companies and harm his competitors and people he doesn't like." So Elon says OpenAI and Apple are in cahoots. Sam Altman says Elon's literally manipulating X itself. And then Elon responds, "You got 3 million views on your bullshit post, you liar. Far more than I've received on many of mine, despite me having 50 times your follower count." Oh my goodness. Apparently this was at 5 a.m. I'm just seeing this right now. So we could have talked about it. This was, 12 hours ago. I'm literally just seeing it right now. So it didn't just happen. But whoa. Dude, Elon calling him a liar, bullshit post. 3 million views on your post. I mean, he is right. Sam Altman, it's not like he's not getting any reach on his content. However, I will say Sam didn't respond to what Elon said. Elon said Apple and OpenAI are in cahoots. And by the way, it doesn't take a rocket scientist to be like, wait a second, OpenAI is going to power Siri. Apple wants to get more distribution with their AI product. Maybe they want to get ChatGPT more momentum on the App Store because users are familiar. There's obviously good reasons why ChatGPT is succeeding in beating Grok, but it's not crazy to imagine Apple and OpenAI are working together as well. Sam Altman didn't respond to that. He could have said, hey, we don't have any backdoor agreement with Apple. He just said, oh, Elon also manipulates X to get whatever views or ideas out there into the world. And Elon's response is saying, hey, you're also getting views on your post, even though you're a liar, and you're getting way more than me, even though I have 50 times your follower count. So I kind of think both of them are right. I think Elon's right that they're both in cahoots, OpenAI and Apple, but I think Sam Altman's right that Elon has obviously made sure the algorithm is strong to benefit himself. But Elon's also right saying, well, wait a second, the algo's not taking away from your views. It's not like you're getting 10,000 views. You're getting 3 million views, even though you have 50x less followers than me. So yeah, this happened last night. I'm seeing it right now. I literally just saw it right now. And I guess a lot of you guys didn't see it either if you're seeing it for the first time right here. All right. Billionaire tech bro drama. That's what we got. Back to Circle.
And that acceleration obviously is tremendous. That's 49% year-to-date growth that we've seen in USDC. That's a fundamental driver of our revenue and of our revenue growth. And so when we look out, we don't give guidance on how much USDC is going to grow. It's sort of an economy, and you kind of see that. But if you zoom out and look at what analysts are saying, not just about Circle, but about the amount of stablecoin money that's going to grow, the CAGRs range from 25% to 90%. So an average CAGR is like 60%. We're happy to take the lower end range of that to say, hey, if we could grow 40% a year, that would be great.
That's huge.
Yeah.
Okay, but what do you think is baked into the cake as you look at your own stock?
Well, look, I think the validation that we've seen in Circle and the sentiment around Circle is really about people understanding, I think in some cases for the first time, that the internet is colliding with the financial system. And it's happening. And just like open internet software, networks and utilities change media and communications and retail and education, it's happening to the financial system. And stablecoin money is and blockchains are foundational to that future financial system.
So weigh in on this big, almost philosophical, practical financial issue, which is that for stablecoins to work properly, they need to be backed by something, typically treasuries. there's a big question mark about who is going to be buying our treasuries in the future, and a view among some that the treasury market is ultimately actually going to be supported for some period of time as a function of the advent of stablecoins, because more people are going to need to buy these treasuries to back the stablecoins, and that should give a boost to the treasury market. Other people say, maybe, but it's really just a recycling of money because the money is going to come out of the banks. And by the way, if they're sitting over with the stablecoins, it's actually less efficient from an economic perspective, given that you actually can't effectively then loan against that money in the same way that a bank could.
Right. I think a lot about these issues, obviously. I think first, the base layer of digital cash on the internet needs to be as safe as possible. And I believe that, the bipartisan policymaking, I think leadership from the administration has set in federal law that stablecoin money is going to be this very safe, fully reserved form of money. When you have money moving at the speed of the internet everywhere in the world, you need it to be as safe as possible. And short duration treasuries, there are multiple eligible forms of collateral for these, but it is at that short end, right? And cash as a kind of cash-like instrument. Now, I think the view that this crowds out the ability for lending to happen, I actually think is a mistaken view. I think that when you have super high velocity, very high utility money, people are going to want to borrow that, and I think we're going to see very robust credit markets develop that are operating on blockchain networks. And we'll see actually more efficient credit delivery with more transparency.
And that's Besant's goal as well. That is Besant's goal as well. That is why they have been such a proponent of the stablecoin industry and why they have been supporting these companies in their pursuit of making more efficient, essentially, credit markets that are just run on blockchains. The 10-year treasury right here, 4.297%. So that one's down a little bit as well. Well, it's up a little bit, but it's down over the past 2 weeks, which is not too bad. Now, the thing about this is, this is the first time I heard the Circle CEO talk. I like him. I like how he was explaining this stuff. I mean, he was good at communicating. He was breaking down the argument. He was explaining why stablecoins have a role in the system of money, or the new system of money that we're creating. And underlying the stablecoin thesis is that Ethereum is one of the major blockchains that picks up a lot of the gas fees based on the transaction volumes across stablecoins. And so, I mean, it's bullish across the board when you look at this new financial ecosystem. On top of that, you've had a ton of crypto regulations that we talked about 2 weeks ago that were passed in the House around digital asset laws and regulations opening up. I mean, you have the crypto regulations opening up. You have Ethereum treasuries that are raising money to buy Ethereum. You've got a lot of big names coming into the space, like a Peter Thiel, a Tom Lee. And then you have stable coins that are taking off. And then you have Robinhood tokenizing stocks. Kraken's going to tokenize Coinbase is going to tokenize. Binance will eventually tokenize. All these platforms will tokenize, and all of that tokenized transaction volume will run on Ethereum. So there is your bull case for Ethereum. It's not that hard to understand. I know some of the Bitcoin maxis don't love the arguments that are being shown, but it's not the craziest argument right here. The question is just how high can it get? I think that's what people are thinking about. BMNR right here, that one is green, 7%. 7% on the day. And that's up. ASML running as well. Yup, ASML up 2%. That is also getting some momentum. ASML, it was down below 700 too from that 850 drop. So that one's slowly trying to make its way up. What about Solana? The thing about Solana that I don't really think is that exciting is that, they've become a de facto meme coin platform. They're not a platform that I understand as people are really building sophisticated financial products on top of, or at least none that have gone viral. And Ethereum's tokenized, like Robinhood's push on tokenization being built on Ethereum and not Solana, to me is enough validation that you have a blockchain that is getting a product that will go viral, aka tokenized stocks across the world, and that's being run on Ethereum. Remember, Trump's meme coin is on Solana. The Melania meme coin is on, Solana has been the go-to meme coin platform for the past 3 years. And it's led to the stock going from the coin going from 9 to, at one point it was like 300. Now it's at 178. So it's been a good return. But I don't know if this is the thing that people are that excited about. Yeah, this as well by Matthias. Transactions can also fail on Solana. That can't happen on Ethereum. Solana does have higher staking. I agree. Just feels like ETH is being more widely accepted. Also, I mean, quite frankly, it doesn't matter what I personally think about Solana. The institutions have embraced Ethereum. It's just that simple. The institutions are embracing Ethereum, not Solana. There's not many Solana ETFs that are coming out, but Ethereum just got $1 billion of inflows yesterday. Tom Lee's not talking about Solana. He's talking about Ethereum. So at the end of the day, you got to follow where the money's going. And the money right now is going to Ethereum. They're covering the Goldman Sachs DJ stuff. So let's look over and see what they're saying on that.
Caused inflation or any other problems for the country other than massive amounts of cash. Ago on shares are up.
Guys were just having in the top of the hour and talking to Stephen Mirren about it. I assume the president may be watching right now as well, but
well, I think
I don't know what else to say. I think David Solomon may have been in not too long ago because a number of the CEOs of the major banks have been coming in, pitching for, back to the conversation we were just having, the lead underwriting position potentially on a taking public of Fannie Mae and Freddie Mac, something I've been discussing here for some time. It could be a while until that offering actually occurs, but it's interesting to think that they were in each other's company not long ago.
I think also, the president is pretty clear. He's calling out Jan Hatzius, the chief economist of Goldman Sachs, even though he's calling out his boss, David Solomon, because the research, what they write in terms of the research economy is different than what, you get from the heads of the bank. But he's just putting pressure, obviously, on the CEO because he doesn't like what's coming out from the economists. I will say
on Friday was about Intel's CEO not being suitable or being conflicted.
Yes.
Now he's
met with him.
He's drilling into lower layers of management.
It's unprecedented to see a president get involved at this level. But this is where the president's interests are to a certain extent, in the financial markets, in the stock market as well as we know. We know that he cares about those things.
But I would also just say that, a lot of the economists were wrong about how the tariffs would impact inflation and the economy. I mean, in April, when the market was plunging.
Wow. Sarah Eisman admitting some of the economists were dead wrong on the tariffs. And she's not wrong about that. I mean, every S&P target went down to freaking 5,200. They all got revised up to 6,700 over the past couple of weeks.
It was doom and gloom. It was put up recession forecast. It was put up inflation forecast. It was
the Fed minutes were talking about 50% recession odds. It wasn't just corporate America.
Sure, but it was. But the economists were leading that charge, and by the way, investors were nervous too. I think everybody did get that wrong.
Right, and I'm not sure that the game's not done. Goldman still sees core CPI rising further.
Well, that's why the president is pissed.
Exactly.
Right. Let's see. We've had a string of better or matching inflation expectation numbers.
So core CPIs are the highest since February. It's hard to see that as
the
a victory.
The expectation was 0.3%. That's
saying,
in line.
It's the highest. It's a 6-month high on core CPI. I'm not sure that is something that is to be celebrated.
Maybe it's bottom, but no, it is, because it was a lot better than people thought. And a lot of it in this report came from services and not from goods, which was the big fear over tariffs. That's sort of that's the discussion. We've got actually more Fed.
Dude, I mean, again, Ethereum breaking out above 4,400. If Trump ends up being right on this and the tariffs don't cause the doom and gloom that everyone expected, and we get deregulations, and you got crypto moving, and you got inflation being stable, and you got a good labor market, I mean, we are likely going to see more momentum in the equity markets as well, which is what we all care about as investors. So, I mean, if that's how it plays out, seems like we're going higher. Seems like there's a world in which we can go higher. Oklo selected for Department of Energy nuclear pilot program. Okay, that's bullish. This is why this stock is up 200% and there's no revenue. Oklo, is that green? That is green. There you go. Oklo selected for Department of Energy nuclear pilot program. You know, we kind of remember the Oklo CEO was with Trump at the White House 2 months ago. I mean, it was, I look, it's hard for me to buy the stock with like no earnings and just like that, the valuation it was at. But if you took a gamble just based on the idea that the government would embrace Oklo as the de facto nuclear player, it's worked out. It's worked out really well. And Now they're a pilot for a Department of Energy nuclear program. I mean, that is going to be lots of money, or at least lots of contracts. We'll see how much money it's worth. Market cap's 10 billion on this company. I mean, if they can get 2 billion of contracts over the next year and a half, that's 5x sales. That's not crazy. That's not a crazy multiple. But obviously they got to bring in the contract. And we've seen the government interfere with materials corporations, right? Giving them an investment as well. So, I mean, you are seeing the DOD and now the DOE getting involved as well. 640 SPY. Did we get it? Did we get it? Oh, we got it. 640 SPY, baby. Wow. And NVIDIA's red. NVIDIA's red and the S&P is moving. So what's moving today? What's helping the S&P? What in the, is it, what exactly is causing this? NVIDIA's the highest percentage and that's down. Google's helping, Meta's helping, Microsoft's helping a little bit, Apple's helping, Amazon's down, Tesla's down, NVIDIA's down. I guess, you know why this is really bullish? NVIDIA down and the S&P all-time highs means maybe the S&P 493 are showing up to the party and they're contributing. Maybe the S&P 493 are contributing. UNH, that one's contributing today. That's green. That's correct. UNH, are we still at 262? UNH, yeah, basically 261.5. The Mag 7 aren't doing that. I mean, Meta's doing a little bit of work today, but the other Mag 7 are pretty much down. Apple's up a little bit as well. It might be a broader, diversified set of companies today that are actually putting up numbers, and we're getting some of this momentum. And I think that's what we're seeing, dude. 640 on a day when NVIDIA's red is nice to see. Okay, so let's look at these. These are all the S&P 500 companies. These are the ones that are green or red today. Broadcom's helping out a little bit. Google's helping out. Tesla's down. Home Depot is up 2% on the day. Procter & Gamble, Bank of America's up 2%. The financials are helping. GE Aerospace, that's up. Wells Fargo's up. United Health is up. Morgan Stanley's up. All the Goldman Sachs is up 3.86%, even with the music tweet by Trump. So financials for sure are leading today. I would say a lot of these value names, Caterpillar value stock, that's up 2%. Disney's up 1%. AT&T's up 1%. Thermo Fisher's up 2%. BlackRock's up 2%. Texas Instruments Semiconductor, that's up 5%. Qualcomm's up 3%. Capital One, another fine. Why are the financials moving this much today? XLF should be up at least 1.5%. XLF, yeah, 1.3%. I don't think there were any like financial headlines today that caused the financials to get some love, but Goldman, freaking Morgan Stanley, Bank of America, I mean, they all crushed earnings, but that was like a month ago. Bank of America at 47. What about KRE? What about the regional banks? The regional banks are green, 2.2. I mean, dude, financials, I think, is the story today on the S&P, just below 640, but we did hit all-time highs. Energy, what's a big energy name? Someone name a big energy name in the S&P. I mean, I'm looking for them right now. Yeah, Constellation Energy, that's in the S&P. That's up 2.3. It's not the Mag 7 today that's doing it. It's not the Mag 7. Duke Energy, Dell's up 2%. Intel's up 2.5. Trump did meet with the head of the Intel CEO yesterday, and they said it was a productive meeting. So we'll see if the Intel CEO continues to stay at the company. Airbnb is up 2%. CEG, that is green. Yes. Rango says rate cuts. Rate cuts look like they're on the way. Exxon, is that up today? Exxon, that's up. Energy and financials. You got the value play that's carrying the S&P today, not the NVIDIAs of the world, which is actually super bullish. You don't want to see the S&P go up just because NVIDIA goes up. You want to see other participants. And you're getting some love. You're getting some love. Yeah, Reddit is not in the S&P, but Reddit is green as well. So Reddit, this has been a great stock since earnings. They absolutely demolished. If you've been in Reddit since earnings or even before earnings, congrats. They absolutely crushed earnings. And this one deserves to be up the way it's up. 229. I think it was at like 170 before earnings. So this one getting some momentum. SoFi right here, 23.17. Hoodie, again, below 114. And then Tessie at 334. Palantir, 184. Hoodie almost at 114. And AMD is at 172. But AMD is about to break green, and NVIDIA is also about $1 away from breaking green. And you are seeing all the airlines are up. You are seeing a lot of momentum. Delta, that is up. Yeah. Wow. Why is Delta up 7% today? United Airlines, why is that up 7.5? Southwest, that's up 4. American Airlines is up 8, and then JetBlue. Now I get why JetBlue is up. Maybe it's just the entire sector. Is it because airline fares were up in the CPI report? Is that the reason? A-Lab's killing it. Agreed. Arista's killing it. All the airlines getting some love, dude. Goodness, 7% across the board on these guys. There you go. There you go. Yeah, CVX, that is up as well. I guess, yeah, cheap fuel, that's an argument. I think the market is getting ready to price in rate cuts. Now, I know we've already kind of priced in rate cuts, but now the market's getting definitive on getting those rate cuts. And I think you got a lot of sectors that obviously would benefit and get excited for it. So oil, where is oil today? We didn't check oil. Oil, yeah, I mean, that also is helping airlines. Oil, look at that, down another 0.5%. This was the only thing that meaningfully decreased in the CPI report. It was energy. It's not too bad, dude. Not too bad. CPI, we needed a good CPI. We got a good CPI. We got a good CPI. Okay, you guys are saying when's the next deep dive? What company do you guys want to do a deep dive on? This Thursday might be hard. This Thursday, so the sofa and couch people are coming to the apartment on Thursday. So I'm probably gonna miss the market close on Thursday because I'm gonna be there all day, like getting everything set up. So this Thursday, a deep dive is gonna be very hard. But I am free tomorrow night. If I can set something up, maybe tomorrow night we do a deep dive. But what company are you guys thinking is worth a deep dive? We're not doing Duolingo, bro. Stupid Duolingo. Goodness gracious, bro. Down 4%. No, it is worth a deep dive. I'm just joking here. It is worth a deep dive, but like, it feels like the AI narrative is what's messing this one up right now. Aristas, that's a good candidate. There's no point of doing a BM&R deep dive. It's an ETH treasury. If ETH goes up, BM&R goes up. There's no reason to do that. Dual, I do think we should do a deep dive eventually on Duolingo to get a better understanding of it. Grab eventually we'll do, but I've already done such a big Grab deep dive on my own. Like, I don't want to bore. I want to give people, if you're part of the channel, you've heard the thesis. So I want to give people something new. SMCI, there's no reason to do a deep dive on that. Everyone knows the SMCI. A deep dive is a stock it's a stock that's becoming exciting to retail and potentially has a really underlying story behind it. SMCI has been around for a long time and people know what SMCI does. So there's just not that something exciting there. Nebius, look, we did one a while ago. I think we could do one again. I think Nebius probably deserves one again. I can get Nate and Sam and maybe someone else tell me with that one. We already did a lemonade one. AppLovin definitely deserves one, in my opinion. I think AppLovin, all right, so let me make a list. I think AppLovin, Nebius, Duolingo, Arista. Those are companies I would say deserve it. Because again, we want to create alpha here, right? We want to create a deep dive where if you watch it, you actually learn so much about the company and that it could potentially influence how you think of it. Yeah, we should do a Palantir deep dive. That's someone asked me the other day, it's like, do you have any videos on Palantir I can understand to watch from your channel? I didn't even know how to answer it. I was just like, yeah, I think, if you go on the channel, there's some content on Palantir there. There's some content on Palantir. Dude, Matt's done Rocket Lab deep dive. We don't need to do a Rocket Lab deep. People know that thesis already. We already did a TSSI kind of pseudo deep dive on the market close a month ago. I think AppLovin's a big one that people don't know about. SoundHound, I'm not opposed to that one. SoundHound, this one had a great earnings. That one we could fit something in. I don't think there's a deep dive to do on Reddit. Like the thesis, like it's got to be a complicated thesis to understand. Reddit makes money on advertising. if they get more people using the platform. That's it. You know, there's not much to talk about there. Obviously, you can go super deep into it, but like with Oscar and Lemonade and ASTS, these are complicated companies. Ethereum, we did a deep dive on. MicroStrategy, I did a deep dive on 2 weeks ago. This is stuff like people don't understand how it works. That's why they want a deep dive. But Coinbase, like, what's the deep dive on Coinbase? Bitcoin goes up. People trade Bitcoin on Coinbase. Coinbase makes more transaction volumes. That's it. There's other parts to it, but at its core, that's the thesis. But AppLovin, I don't think anyone understands AppLovin, dude. Like, even people who own it don't. Even Tanner doesn't. I don't think he fully understands AppLovin. He likes it, and he bought it at that 350 dip, and it worked out really nice. But it's one of the only advertising plays that has worked out all year besides Google and Meta. And I don't think people fully understand the company itself. Okay, so we got some good suggestions right here. TSM, see, I think that's worth it because TSM, I don't think anyone really knows what TSM does either, bro. We will say, oh, it's chips, semiconductors, but what does TSM really do in the supply chain for NVIDIA? Like, I think it's an interesting thing to really dive deep on and try to understand. But some of these names are a little too easy. So I don't know if it's the most exciting. Austin says, I own it and I barely understand it. Yeah. And there's not a lot of AppLovin like people on Twitter. So I got to find someone who actually understands it. S&P, new all-time highs, continuing to go higher. 640.27. 640.27. Broadcom, yeah, I don't know what the hell Broadcom does. All I know is they're worth freaking 1.5 trillion. That definitely would deserve a deep dive. Like, these are companies that I think a lot of people are just, they know they exist, but they don't know how important they are. Shopify, is that one holding on from the gains of last week? Shopify was at 150, Shopify 148. Not bad. So Shopify, this stock has been incredible. Tanner has been big on this stock for a very long time. Shopify up 40% year to date. This is the, I think, biggest tech company in Canada. I think so. So Shopify getting some momentum. Big Bear AI, I don't know if it's worth a deep dive. I mean, they're just not growing. That's the issue. So even if you do a deep dive, you would have to really uncover something very deep to look past the headline numbers. And maybe there is something deeper there. But that one is down about 27% of the day. Dude, when Canva gets ready to go public, I absolutely would want to do a deep dive on them. Canva has 220 million monthly active users, bro. Like, I think that's going to be a $100 billion IPO. But we got to see. Netlist, thank you for the super chat. I've heard of Netlist before. This is a small company, though, right? Didn't they have a lawsuit with Google a while ago? This is OTC. We can't do Netlist. Yeah, you can't do any of the OTC stuff. But this thing is down a lot. I've heard of this a while ago. I think they had a lawsuit with Google like 2 years ago. But they don't trade anymore on these markets. Oh, thanks for the $50 super chat. Rick, can we do a IRL deep dive in Miami? That would be fun. It would be fun to see some of the establishments that Rick has in Miami. Dude, Miami's going to be fun. I'm excited for it. I just bought my flight yesterday. So I am very excited to be there, and it should be a fun meetup right here. Oh, Sam Altman responded to Elon. Here we go. Sam Altman responded. So Elon says, you got 3 million views on your BS post, you liar, far more than I've received on many of mine. Sam Altman 4 minutes ago, will you sign an affidavit that you have never directed changes to the X algorithm in a way that has hurt your competitors or helped your own companies? I will apologize if so. Elon's not signing that shit. Elon's not signing that shit. That's not happening. Because, dude, I mean, it's pretty obvious. We know Elon has worked the algorithm to help his platform. And look, it is what it is. He paid $45 billion for it. Like, when you pay that much for it, you get to do what you want. It is what it is. That's just how it works when you own massive enterprises. But if Elon says yes, also correct, that's not a denial. Sam Altman is not denying that him and Apple are in cahoots. He's just He's just saying that you're doing the same thing, Elon. And now he's trying to get Elon to admit that he's doing the same thing as him. And if Elon doesn't admit it, and Sam doesn't admit that Apple and OpenAI are not in cahoots, then they're both just two tech bros arguing for the sake of arguing, because they're both doing the same shit at that point, right? I mean, they're literally both doing the same thing, which is realistically how this is playing out. Now, what if Elon says yes? What if Elon says, send me the contract, I'll sign it right now? That would be rather interesting to see. Elon has nothing to hide. He will sign. Okay, let's do a poll on this. I don't think Elon's gonna. I don't have any proof Elon's manipulated the X algorithm, but it's hard to imagine you pay $45 billion for something and then you've never instructed your engineers to juice up the algorithm a little bit. I don't know. Will Elon sign the affidavit? You know, affidavit is such an interesting word, bro. It's always fascinated me. Affidavit. It's always been an interesting word.
Affidavit.
Because it's like David is in the name. Like, you can't avoid that David is there, but they put a T instead of a D. So then you think it's not David. But it's basically David. Anyone who says it says David. Wow, S&P is trying to go for 641. Whoa. That's a $4 move. That's a 0.72%. It's trying to go for 641. That would be into the 6400s. 75% of you say no. The reason I'm also saying this is, if you guys remember a year ago, Elon tweeted about the algorithm. And I remember this tweet. I'm trying to remember exactly how he framed it. But there was a tweet where he was like, where his content was getting so many more views, like so many more, like even Elon was like, yeah, there was an issue with the algorithm and people who didn't even follow me, I was showing up into their feed, but it was at like this egregious level. And Elon, like, I got to see if I can find this tweet, but there was a tweet back in 2024 where he said the algo had something weird and I was showing up too much in people's, like, you could be on music Twitter, right? Music Twitter, sports Twitter has nothing to do with Elon. Elon's talking about tech and politics, and Elon was showing up. And people on the platform, I've been using Twitter for 3 years, so I remember this, started complaining, like, why is Elon showing up in my feed? I follow people that talk about, like, Ronaldo versus Messi. Like, why is Elon here? And I remember him saying, yeah, the algo was a little too aggressive. So the idea that he's never manipulated or that there's never been any form of manipulation, I mean, it's just hard to believe that. But I don't know. Now Sam Altman put him up to the test on, will he actually sign this affidavit? Ask Grok. That's a good question. Let's ask Grok. Let's see what Grok says. Steven, thank you for the $100 super chat. Appreciate that, brother. Amit just passed 100,000, started investing in January of 2024. And thanks to you and others, as a chef, I learned and am learning to build a solid portfolio. Here's 100 to go buy a medium rare steak. Steven, thank you so much for the super chat. Congratulations on 100,000. That is a very, very big milestone, and you deserve a drink tonight to celebrate for that. And I love it that you're a chef. Okay, so I guess you like medium rare. I'm actually getting steak. I'm going to a dinner on Wednesday or Thursday in New York, and I don't care what the person says that I'm going to dinner with. I'm getting medium well, dude. I don't care. I'm getting medium well. But deeply, deeply appreciate the super chat. Congratulations to you. From January 2024 to start investing to a year and a half later to be at 100,000 is not easy, dude. And I know we've had a bull market, but still, you've had to make good decisions. So not bad to see that momentum, and congratulations to you. Okay, so let's see. Has Elon Musk ever manipulated the X algorithm to help him? And do you have any proof for this? I mean, Grok might say no, because I don't think there's any actual proof. But we got to see. There have been allegations that Elon has manipulated X algorithm to boost his own posts or promote specific political narratives, but definitive proof remains limited. Allegations: French prosecutors launched a criminal probe in 2025 into algorithmic manipulation. Sam Altman, that was yesterday. Research on algorithmic bias. A 2024 study by researchers suggested X's algorithm was tweaked around 2024, coinciding with Musk's endorsement of Donald Trump. The study found a 138% increase in views and 238% increase in retweets for Musk's posts, hinting at possible algorithmic prioritization. Counter arguments: Musk has denied direct manipulation. Some X users argue that increased visibility could result from Musk's high follower count. The French investigation have not yet produced evidence of actual manipulation. All right, so now we got to see what Elon says to Sam Altman. If he even responds. I mean, I think he would respond, but we got to see if he actually does respond. Robinhood right here, 114. Robinhood right here is at 114, and you are green. Green on the day, 114.25. Pound here, 183.93, and then Tessie right here, 337. Would releasing the algo be proprietary? I mean, they've open sourced parts of the algorithm, but I don't think the latest version of it is open sourced. Now, again, Elon, he has 250 million followers, so he's going to get a lot of views on his stuff, and that is a good counterpoint against manipulation. But with Sam Altman accusing this, I mean, Sam Altman also is in the tech world. He probably talks to people. And so if he's saying this, again, he's not denying what he's doing with Apple. But I'm just curious how Elon responds to this. We're going to have to see. Where's the US dollar? USD. Let's see the Dixie right here. That is down a little bit on the day, 98.19. That one has been hovering around 97.98 for a while. And it looks like that one continues to be down about 1/3%. Your problem was different to Sam's allegations. Stifling competition is a bigger crime. Yeah, I don't know if Elon's done that. I don't like stifling competition. So that means Ethereum, by the way, really breaking out 44.22, S&P 20 cents away from 641. I mean, stifling competition would mean who competes with Elon? Oh, like GM and Ford. I don't know if Elon's programmed the algorithm to make it. That's a little too far. Because he actually wants GM and Ford to post on the platform. And remember, back in 2023, they were not posting because they were afraid of all the hate speech and stuff. I think he would rather want them to post on the platform because they are more likely to advertise versus like nuke their numbers. Also, like, what are you doing competing with? Ford and GM aren't even real competitors to Tesla from that perspective. It'd be hard to imagine that. And look, I don't think he's nuked OpenAI's reach, dude. If you look at OpenAI's tweets, I mean, they get millions of views, and similar to Sam Altman. At OpenAI, when they launched GPT-5, they got billions of impressions. So, I mean, look at this. OpenAI, 1.4 million views. They have 4.2 million followers. Dude, that's a 33% ratio between views and followers. That is not the algo hurting their views at all. If they had like 100,000 views, okay. 33% of your followers seeing the content, or at least getting the ratio of the content. I mean, that doesn't seem like he's nuking the reach of an OpenAI. S&P really trying to go right there for 641. And then Ethereum also getting a bit of a breakout. I think Elon will sign the affidavit and then he'll ghost him. Yeah, I mean, that's also possible. That is also very possible for him to do that as well. Okay, I think that's pretty much the major stories of the day. 71% of you say no, he will not sign the affidavit. Let's see if there's any other headlines right here. I mean, I think the big headline today was Bitmine raising as much money as they're raising. The Trump JP Morgan or Trump Goldman Sachs tweets and the CPI thing was the other stuff we had, but that's pretty much it. We do have a Tesla headline. Tesla reshuffles engineers after abruptly ending Dojo AI project. So that was last week's headline, that Elon's getting rid of Dojo, or at least not embracing it as deeply as it was before. One of the presidents of Dojo is now leaving the company as well. Tesla right there, down 0.5% on the day. Look, the fact that Tesla's holding up even after those crappy earnings means that, again, the street is just pulling forward the growth. And the CPI we got today. Also, Tesla's been advertising heavily their $7,500 tax credit when it comes to EVs. I think Q3 is going to be a hell of a quarter for demand. I think it'll be the best quarter they had all year, because a lot of people know that $7,500 is going away by September 30th. Now, it might be a one-time thing, but still, that would be very bullish for Q3 deliveries as well. Why is Bank of America up? All the financials are up today. I don't exactly know why, but all of them are getting some love. I mean, maybe it's because of CPI. Maybe CPI is enough for the market to think, all right, well, here's the thing. Okay, so if CPI means rate cuts are inevitable, which, by the way, the probabilities are at 95%, so it looks like rate cuts are inevitable, now at 92%. The banks are holding on to a lot of bad loans when you mark them to market because they issued them at 2%, rates are at 4.5%. And so they're holding hundreds of billions of dollars of losses. Bank of America alone, I think, has $200 billion of losses on their balance sheet. Paper losses. But as rates come down, those losses stop being as bad as they are, which increases their tangible book value because you have less losses on the balance sheet. And so if you factor in 3 cuts by the end of the year, which Goldman Sachs said yesterday, we think 3 cuts, that's really good for financials. And as long as the labor market holds up, you could see financials catching a bid. And then you have deregulation across the board, which is obviously good for financials with M&A and IPO. So I think that's your argument for why financials are leading the way today. And getting some love. Yeah, I think it's CPI. I think it's CPI. And Google doing its thing as well. I know a lot of people here own Google. I mean, 203, this stock year to date, is it still down or it's up a little bit now? Year to date, Google is up 7%. Apple still is down 7%. So Google in January was 190. Now it's at 204. And it got to 146 in April, and it got back to 140 in May when the Apple lawsuit came out. So maybe this one's ready to break out. Maybe this one is ready to break out. Now, speaking of Google, Gene Munster, we've been following his Google coverage on the channel for the past year now. He has been super bearish Google. The other day, he tweeted that he's switching to being bullish on Google. He said he is changing his tune on Google, and he's not as bearish anymore. He says they're handling AI search well, and I expect another major overhaul next May, one that delivers a unified AI-powered Google experience across a single surface. Gene is the person who was, comparing Google to eBay a while ago. Sometimes, as an analyst, you just gotta, realize that the comparisons might not be the best. Everyone gets them wrong, but it looks like he is switching his tune. However, he is still really bullish Apple, and he thinks over the next year, Apple will be one of the top performing Mag 7s. And this was his take this morning on Apple.
In the last 3 years, about this massive pool that came in 2021, iPhone surged up 37%. A year ago, I was predicting a super cycle, and I define that as iPhone growth going from flattish to plus 10%. In fact, it's going to end that period up about 2%. So I was wrong on.
Wow, S&P hit 641. My goodness, we just touched it. 641.03, folks. This is a green day, and it's being led by everything other than NVIDIA, which is nice to see. Like, it's really nice to see a new all-time high that's not being led by the most concentrated stock in the index. There you go. I mean, new all-time highs after last week where we also hit all-time highs. August 1st was ugly. We recovered that. And we are now at 640 on the S&P. And Apple participating also helps.
On that. But one thing that we started to see in the June quarter is that the iPhone started to re-accelerate, going from up a couple percent in March to adjusting for the pull forward and tariffs. It was up about 10%. And there was nothing significant that came out in the product. What it was that upgrade pool from a couple of years ago. Now, I understand that this is not exciting to talk about, but the substance of this, again, comes down to, is Apple in a better place to exceed expectations? And I think the answer is absolutely. And then keep in mind, too, is that we're probably going to see this new iPhone Air next September. This is not going to be their premier phone, but it's going to be something that is going to appeal to kind of that $800 price, something a little bit more aesthetic, thinner phone, lighter phone. And typically when they come up with a new hardware piece, that has a positive impact on growth. And so I'm optimistic. One last point, Joe, of course, is that what's going on with AI and some of the hardships that Apple has had here. Wall Street Journal, Tim Higgins has a nice piece today. He talks about that Apple's just in a tough spot when it comes to AI. Effectively, their privacy first position limits what they can do ultimately with AI. And I tend to have a different view on that. I think that they have a ton of information that they still can use and create unique insights around AI. And I'm optimistic about what they're going to show next year. So bar is very low is the punchline when it comes to AI. And I think when you put all of this together, I think Apple's going to be one of the top 2 performing Mag 7s over the next year.
Really? Okay. Do you, just on a broader issue, and we were talking about the Tim Cook in the Oval Office and the way things are, I don't know if you can extrapolate, but things are different in the way things are being done. The Journal has a piece now, now President Trump wants an export tax and it talks, the front page piece about what Jensen Huang was faced with.
So again, Gene's big point around Apple is that they will figure out Siri, they will figure out their AI narrative, and that will get them green. By the way, NVIDIA is going green right now. So NVIDIA is joining on the S&P 500, hitting all-time highs. Again, I don't know if Apple is going to be the best performing Mag 7 over the next year, or one of the best performing Mag 7s, but that is what Gene thinks. But NVIDIA probably will be if they keep their momentum up, and they are going green today. S&P just below 641. AMD as well going green, up 1%. Grab is green. Googs is green. SoFi is green. You're seeing some of the tech companies follow the financials today. Reddit, great day, up 3%. Hoodie trying to get back to 115. And then Palantir, green as well at 185. Amazon as well going green. VIX down 9%. I mean, Tom Lee did say this would be the week where we march our way up to 6,500. I mean, we got to get through 64 to get to 65, and there we are, 640 on the S&P 500. Not bad. Not bad at all. Pretty nice to see. Yeah, airlines as well going green. And that's what's getting some momentum. All right, so I think that's it for today. CoreWeave after the bell. That's going to be important. We will have Technical Tuesday again. I know we didn't have it for the past couple of weeks. We had a lot of earnings every Tuesday. So today we will get back to doing all the TA with Jason. And we're going to see where this market is going. So we'll do CoreWeave. I think that's the only major earnings after the bell. So that'll be like the first 30 minutes. CoreWeave, and there's one more company, I think. CoreWeave and Kava. And Rigetti. Okay, so you got some quantum, you got some Mediterranean food, and then you have CoreWeave. Those will be the 3 companies we look at. And then we'll get into Technical Tuesday. And we're going to keep going from there. So there you go. S&P 500, all-time highs. Not that bad to see. Word of the day is cause.
Cause.
Of course. Why not? Why not? Why not? Why not? 4-letter word. Of course, it would be the exact opposite of what I said. I was about to say cause too, but then for a second I was like, no, it's probably cause. And of course it's cause. Of course. A friendly talk or chat. You guys think I'm doing this on purpose, dude. I think if you've been here enough times, I am not doing this on purpose. Like, these words complicate my ability to speak. It is just ridiculous. She invited them over for tea and a little coze about the old days. And then we planned, let me pull this one up. We planned, where is it? We planned our trip during a coze in a quiet corner away from the noise of the party. She invited them over for tea and a little coze about the old days. We planned our trip during a coze in a quiet corner away from the noise of the party. Trump and Powell had a coze with construction hats. Dude, Trump's talking about suing him. They were just talking together with the hats. So although that talk was a coze, I guess maybe it's not if he's actually going to sue them. All right, there you go. Let's have a coze at the Miami meetup. Yes, we will have a coze at the Miami meetup. It'll be fun. I'm looking forward to it. We got 2 weeks left. Should be very, very exciting. And should be a good time. Should be a good time. So I think it'll be a good way to end out the summer, and should be fun to see everybody going into the end of August as well. I will link the meetup form again one more time. We pretty much have all the spots confirmed, but if you really want to make the meetup, please sign up today. I will send you an email with some instructions on what to do to officially confirm your spot, but it's pretty much all set in stone, and yeah, if you want to sign up, if you want to make a trip to Miami, August 23rd, we'll be doing a meetup. You can sign up there, and then we'll do it in the next 2 weeks, and I will see everybody there. All right, cool. That's it. How are you top 7 debater in the country? I don't know, dude. I don't know. This is I know that I'm diagnosed with spoonerism now, which is basically not being able to say words correctly because your mind is running too quick. But spoonerism and whatever other speaking issues I have, I've got them. So there you go. All right, so we'll be live on the close. CoreWeave earnings, Rigetti, and Kava, and then a technical Tuesday, probably around 4:30. So after we get all the earnings, we'll go deep. We'll probably be live for like 2.5, 3 hours covering a lot of these stocks. Now that they've had their earnings move, we can have a better understanding of what these stocks will look like. And so we'll be live later at the end of the day. All right. That's it. Thank you, everybody. Appreciate it. I'll see what I can do on the deep dive. It won't happen Thursday, but maybe if I can get some people together, we can do a deep dive tomorrow. I'll let you guys know in a little bit. But I will see if we can get at least one of these stocks to do a deep dive on tomorrow. And if not, then probably next Thursday, we'll get a deep dive done. All right. That's it. Thank you, everybody. Appreciate it. I'll see you guys later on the market close. Bye, everybody. Have a good one.